may be distributed to committee members as exhibits only while testimony is being offered. Hand them to the page for distribution to the committee and staff when you come up to testify. We need 10 copies. If you do not have 10 copies, please flag down a page now so we can help you get there. To my immediate right is Committee Counsel Joshua Chrysler. To my left at the end of the table is our Committee Clerk, Natalie Shunk. The committee members with us today will introduce themselves, beginning on my far left.
Elliot Bostar, District 29.
Brad Von Giller, District 4.
Mike Jacobson, District 42.
Kathleen Kauth, LD 31.
Bo Ballard, District 21.
George Dungan, District 26.
Also assisting the committee today are committee pages, Caitlin and Isabel. The committee will take up bills today in the following order: LB 710, LB 778, LB 448, LB 538, and LB 537. With that, we will open our hearing on Senator Dungan's LB 710.
Good afternoon, Chair Slama and members of the Banking, Commerce, and Insurance Committee. I'm Senator George Dungan, George Dungan. I represent the people of Northeast Lincoln in Legislative District 26, and today I'm introducing LB 710. Legislative Bill 710 would provide a much-needed update to our state's Credit Union Act to add definitions, make technical changes, and offer updates to enable Nebraska credit unions to operate more effectively and efficiently in serving their members. LB 710 is about preserving the dual chartering system for Nebraska credit unions, maintaining local control and oversight, and protecting the monies the state receives from state chartered credit unions. Over the years, the relative appeal of the state credit union charter has declined. As a result, the state has seen and will continue to see a migration to the federal credit union charter if legislative action is not taken. As with the dual banking system, credit unions have the choice to operate as a federal charter or a state charter. The Nebraska Department of Banking and Finance charters and supervises state chartered credit unions. Federal chartered credit unions are chartered and supervised by the National Credit Union Administration, or the NCUA. The NCUA also administers National Credit Union Share Insurance Fund, the NCUSIF, which insures all Nebraska credit unions. Unless there are meaningful, significant, and substantial changes made to the State Credit Union Act, the dual chartering system in Nebraska remains in jeopardy. Currently, there are 11 state chartered credit unions and 45 federally chartered credit unions. Only 20% of our credit unions have chosen the state charter. Conversely, 93% of Nebraska's banks have opted for the state charter. Our neighboring states have done much better than we have in attracting credit unions to opt for their state charters. For example, Colorado has 49% state chartered credit unions, Kansas is 72%, Missouri is 89%, and Iowa has a 96% state charter for their credit unions. South Dakota and Wyoming do not have a state credit union act. Our neighbors have done a good job at updating their state credit union act, keeping their money local while Nebraskans are sending their money to DC. Simply put, it's more expensive to be a state chartered credit union in Nebraska. Nebraska's state chartered credit unions receive no preferential tax treatment from the state. As a result, state chartered credit unions are subject to additional tax burdens, such as the Nebraska Financial Institution deposit tax and sales tax, not imposed on their federal credit union counterparts. The State Credit Union Act has failed to keep pace with the evolutionary pressures of the modern financial marketplace. Unlike the State Banking Act, which is consistently and constantly updated, allowing for a successful evolution in a financial world of swift and dramatic changes, the State Credit Union Act has not been afforded the same opportunities. I did pass out an amendment. You'll have a chance to look at that just so folks are aware. That's very simple. We're striking some language and returning to the original language that was in the Credit Union Act. So we're just getting rid of the modifications that were proposed. I also want to mention I've had an opportunity to speak at great length with the bankers. I've met with Mr. Hallstrom as well as others and the credit union's representatives. And I understand that today there's going to be some opposition. There's going to be some proponents. I'm hopeful that we can find some common ground. It does sound like after speaking with some of the bankers that there's some things we can all agree on. And so I just want to mention we've had those conversations and we're going to continue to have those conversations. And I look forward to hearing the testimony here today to make sure that we are all clear on what some of the issues are and how we can reach some consensus. So with that, I look forward to working with my fellow committee members on this legislation. I'd urge your consideration of LB 710, and I am happy to take any questions, although many more experts are going to follow me who might be better suited for those questions.
Thank you, Senator Dungan. Are there any questions from the committee? Senator Von Giller.
Yeah, thank you, Senator Slama. Senator Dungan, as I read through this, and I'll admit, the intricacies of the state chartered credit union versus federal versus banking regulations might be a little bit over my head and get me a little bit lost. One thing that felt a little bit bizarre or uncharacteristic in this was on page 3, the reference to savings accounts being set up in schools. Can you comment to that?
Yes, so there are actually folks coming after me who are going to speak
Okay.
specifically. Essentially, I think the people after me are going to speak to each modification in the provision. And so questions you have about some of those
Great.
modifications
I'll say
would be best for them, but I'm happy to sum it up at the end. Long story short, as I said, what we're trying to do is make this a state that is welcoming to state charter credit unions. As of right now, I know there's just a number of hoops that credit unions have to jump through. Those were obviously put in place to make sure that consumers are being protected. I think we can all agree that consumer protection is important, but we're trying to make sure the state credit unions, the state charter credit unions remain competitive. And I think that's a small component in going a long ways towards that, but they'll have more details about the actual functions of the
I'll listen
program.
as we go forward. Thank you.
Thank you.
Thank you, Senator Von Gilleren. Additional committee questions? Senator Jacobson, sorry.
Thank you, Senator Dungan, for being here. And some have accused me of being opposed to credit unions. I just want to be on the record, I'm not. But I do have a couple of questions. I know you're going to have some following you, and I certainly, if you aren't feel comfortable answering the question, I'll ask them that question. But do you know if there's anything in this bill that would give additional powers beyond what federal credit unions would be entitled to today?
I don't know the answer to that off the top of my head. I will
My
let the
guess
experts
is you've
talk
got
about
a
that.
testifier back there that'll answer that question.
There's probably some shaking or nodding going on behind me right now,
Yeah.
so I'll let them
Yeah.
address that.
Yeah, okay, thank you.
Thank you, Senator Jacobson. Additional questions from the committee? Seeing none, thank you, Senator Duncan.
Thank you. I will stay close. Shockingly.
Wonderful. We'll now open it up for proponent testimony on LB 710. And just a note, if you are testifying on this bill, please come up to the front few rows. It'll help save us a lot of time. Good afternoon. Good afternoon.
All right. Good afternoon, Chairwoman Slama, members of the Banking, Commerce, and Insurance Committee. My name is Angie Schreiner, ANGIE-SCHREINER, and I'm the Senior Vice President of Marketing at Liberty First Credit Union. We're a state chartered community credit union serving those who live, work, and worship and attend school in Lancaster and Seward County, and those who are related to someone eligible for membership. Liberty First provides financial services to over 31,000 members with 4 branches in Lincoln, 1 in Seward, 1 in Omaha, as well as a robust online platform. I'm testifying today in support of LB 710, and I thank Senator Duggan for its introduction. LB 710 modernizes and updates the State Credit Union Act. I'm focusing my testimony on school branches. This provision, 21-1725, .013 codifies the state statute, the opportunity for the credit unions to assist in providing schools and their students with vital education and hands-on experience for learning to save, developing a regular habit of saving, and the use of savings accounts in schools who have students that reside in the same city or village where a credit union has a location. Liberty First Credit Union currently has 3 school branches operating in Lincoln, 2 of which are Title I schools, which are 40% of the population in that school are on free or reduced lunch. The first one opened in September of 2011. Each year, 8 to 16 upper elementary students are selected through an application process and an interview process to alternate weeks working at the school branch as tellers and are supervised by the teacher coordinator and associates from Liberty First Credit Union. Student depositors receive with their first deposit, receive a $5 match from Liberty First, and receive different incentives for habitual savings and for reaching savings levels. A recent long-term analysis of high school students who participated in a savings program in elementary school, completed by Dr. Jennifer Davidson and Dr. William Wallstad, both of the University of Nebraska Lincoln, found that 92% of these students who participated in the school branch opened their own credit union or bank account once they reached high school. Those who participated in elementary school savings programs were significantly more likely to be banked, more likely to be earning income in high school, and were more likely to be saving. And they're saving at higher rates compared to students who didn't participate. Out of the participating Nebraska students, the average annual savings is just $54.76. If these students were to continue saving $55 a year from age 15 to 65, With an assumed 8% rate of return, they would have $381,000. A savings program like this is not only encourages the habit of saving, but helps educate students on the importance of savings for a goal and building for financial base to navigate the fickle fingers of fate life often throws at us. Watching these students' excitement and understanding how their savings grows while they visit the branch each week and then potentially become a teller and help instill the valuable lessons that they learned in other depositors while they themselves are learning a new skill of how to navigate job responsibilities is something amazing to witness and so important for Liberty First Credit Union to be a part of. Providing our mission, providing a lifetime of financial solutions really means a lifetime and starts at a young age to help them be successful in their financial goals. I want to thank you for your consideration, and I urge the advancement of LB 710. If you'd like to know more about how our school branches work, I'd be happy to answer any of those questions now.
Thank you, Ms. Schreiner. Are there any questions from the committee? Senator Von Giller.
Probably knew I was going to have a question, didn't you?
I did.
Yeah, thank you. This fills in some of the blanks. I love the idea of teaching kids at a young age to save and teaching the illustration of compound interest. And it's a terrific illustration. The schools or the school districts on board with this? Are they just welcoming? Is it something that they're asking for?
They are asking for it. The
Okay.
program, so when we started in 2011, there was one branch here in Lincoln that was open. And it was opened at Clinton Elementary by, I believe it was US Bank at that time, I believe. There'll be someone who can clarify that if I'm wrong on that statement. And we went ahead and opened at Hartley, and then we opened 3 more. Since then, COVID hit. We've had one school who is prioritizing some other issues. So we have 3 open at this time. They are asking for it. It is in the districts that for Liberty First, we're only open in Lincoln. But I know there's schools in Omaha, there's schools in other western towns that have these. And they want them as a way to educate their students.
Okay, thank you.
Thank you, Senator Von Giller. Any additional questions from the committee? Senator Jacobson.
Thank you, Ms. Schreiner, for being here. And I applaud the efforts to work within the schools. I know there's a lot of banks that are doing this too, and I think it's an important concept that kids need to get involved early. I guess my question for you would be that how is Liberty First organized? Are you a community credit union, or what's your organizational structure?
Thank you, Senator. We are a community credit union. We were started in 1935 at Burlington Railroad and received community charter, I believe, in 2003.
But is it correct, though, that not all credit unions are community-based, that they are employer-based?
There are some who are still employer-based, yes.
So this bill would basically allow all types of credit unions to open school branches?
It would allow yes, it would allow them all to open it. But within the school structure, it is the school that houses that account. Each student doesn't have an account. It's the school that holds the account, and then each student is listed within that.
Yeah, I'm familiar with how they work those. I guess my question becomes, and my concern obviously is how you're organized seems to limit your field of membership. And this would seem to be encroaching upon that field of membership, to be having someone that's not employer related being a member, because really we're not talking about deposits here. We're talking about really shares, aren't we, in the cooperative?
You are talking about shares, but it's one school who's opening it. It's not a bunch of students. So you're really still serving that school. And yeah, that school may be outside of the field of membership of a select group. But when a credit union is making the decision, along with the Nebraska Council on Economic Education and that school, they're considering whether that's a good fit for all 3 and if it makes sense for that credit union.
Got you.
Based on their field.
But let's be clear, we're talking about expanding the powers beyond what are granted today for an employer-based credit union.
For employer-based, I wouldn't be the one to talk to that as we're
Thank you.
community chartered.
Appreciate it. Thank you.
Thank you, Senator Jacobson. Additional questions from the committee? Seeing none, thank you very much, Ms. Schreiner.
Thank you.
Good afternoon.
Thank you. Good afternoon. Chairman Slama and members of the Banking, Commerce, and Insurance Committee. I'm Frank Wilbur, President and CEO of Liberty First Credit Union, a Nebraska State Charter Credit Union headquartered in Lincoln, Nebraska, serving over 31,000 members. I will say the rest of the AG already went through. I am testifying today in support of LB 710, and I thank Senator Dungan for introduction. LB 710 modernizes and updates the State Credit Union Act. Today, I'll be focusing my testimony on eliminating branch hearings and bylaw amendment hearings as related to revisions to provision 21-1725.01 subsections 3 and 2. In our opinion, this revision is necessary to help the Nebraska State Charter Credit Unions be as flexible as our federally chartered counterparts when it comes to these kinds of issues. They have no hearing requirements for either establishing a new branch or amending a bylaw. The NCUA, who regulates federally chartered credit unions, as was said earlier, relies on their on-staff professionals to make an unbiased decision on such subjects based on the health and effectiveness of the credit union, along with a well-documented and clear application process that is timely and, most importantly, consistent and objective. They provide a reply to a bylaw amendment request within 90 days, doing so without ever holding a hearing to gather input from unobjective third parties. In Nebraska, we're one of only 3 states who operate under similar hearing requirements. All of the objections that I've been witness to and been part of have been made by a single bank or the bankers associations, who seem to look for these hearing opportunities to stall credit union growth across the state and stifle competition, specifically from credit unions, to really no benefit of the citizens and small business owners in our communities, whether it's urban, rural, or otherwise. And those folks would really benefit greatly from additional access to other financial institutions. Each year, our legislature takes the time to carve out a wild card for all state chartered financial institutions to put us on par with federal charters. Unfortunately for credit unions, it really does not have a lot of merit. The types of things we asked to do, we're still subjected to different ways of doing them than our NCUA peers are. So this is simply, this revision would remove the hearing requirement, put the decision in the hands of the Department of Banking where it should rest with their expertise and their ability to make a decision based on our ability to serve the areas we want to serve or make whatever bylaw amendments we want to make. The second part of that is the branch requirement for a hearing. With the branch requirement for a hearing, I know that there was no credit union branches added in the prior year. There was 18 bank branches added. I believe there was no hearings and no objectives to any of those. I think that it's likely we've reached the point where we're beyond needing to post a hearing for a branch location again. The department would have the ability to look into that and see what kind of sense that makes. Otherwise, I really don't have much more. I can answer any questions if anyone has them.
Thank you very much, Mr. Wilbur. Are there any questions from the committee? Senator Jacobson.
Thank you, Chair Slama. Mr. Wilbur, I guess my question would be, I know you're looking at comparisons of bank branches and credit union branches, but isn't one of the big issues on the hearings the question about expansion of your field of membership? And if I'm not mistaken, most of the objections that have been filed in the past have been going beyond the rules of field of membership for credit unions because you are chartered differently because of your tax preferred status. And I think that's been a lot of the issue. I mean, is that not part of the issue that we're
Well,
dealing with
again,
here?
as a state charter credit, we have no tax preferred status, 0. There's not one tax that a bank would pay that we wouldn't pay at a state level.
Let me follow
Okay,
up
so
on that.
okay.
So you're telling me that a state chartered credit union would not pay would pay federal income tax?
Well, we pay the same. Our shareholders pay dividends on all their, or interest on all their dividends, similar to how a chapter S bank would work federally.
But banks would pay at the bank level and on sub S, the actual owners of the bank would pay based upon the earnings that were made at the bank level, whether it was a distribution.
Similar
or
to
not.
credit unions, our
They're
members are
similar,
our
but not the
owners.
same, right?
Well, our members are the owners. I draw a good parallel there.
Well, let me just be clear on that.
Sure.
I don't want to be argumentative, but I guess my question to you though is, my understanding is your members would pay income taxes on any distributions that they received, not on the amount of earnings that the credit union earned. So if you had retained earnings, if you had earnings that you retained, no one's paying any federal income taxes on those. In the bank's case, they would be. There's this distinct
Again,
difference.
I'm aware, as I will just say, I'm aware of some banks that are structured to pay exactly the way we pay, where really the retained earnings of the banks flow through the shareholders. So it's it can be looked at to be a different kind of layout. But again, we obviously as a state charter credit union, we're not opposed to necessarily paying our fair share, especially when it comes to the state. And as a state charter credit union, that's where we're looking for relief from. We're not looking to the NCUA for relief. We're looking at it and just quite honestly, we're looking at it from a standpoint of what would be the reasoning to stay as a state charter credit union at this point. If it's more difficult to do things that are fairly easily achievable through the NCUA at this time, and with the additional taxes we do contribute to the state, much like all our banking peers, it would be nice to feel like there was value in that. And that is exactly what Senator Dungan was stating at the beginning of this. There's just diminishing value to a state charter as a credit union right now. There's just, it's not, I wouldn't suggest that it's anyone's intention to make sure all the credit unions become federally chartered, but the way that things are structured right now, you're steering every credit union in the state that does pay sales tax that could be used for some property tax relief away from being state chartered. And I just think that that's a light that should be shining on the subject is, what would the motivation be? We haven't had a dedicated credit union regulator for 5 years. The last person that left, and we've been using banking regulators. So, having a regulator that does not have knowledge necessarily of the credit union industry is a tough thing to do, but we pay extra for local regulators. So that's one of the
Thank you.
reasons.
I appreciate that. I think you answered my question. Thank you.
Thank you, Senator Jacobson. Additional questions from the committee? Seeing none, thank you very much, Mr. Wilbur.
Thank you. Appreciate it.
Thank you. Good afternoon.
Good afternoon, Chairman Slama and members of the Banking Committee. Thank you for having me and letting me speak about LB 710. My name is Linda Carter, LINDACARTER. I'm the president and CEO of Members Own Credit Union. I'm speaking in support of this bill to update the State Credit Union Act. Specifically, I'm speaking about Section 211743, Geographic Field of Membership. Members Own Credit Union is a $113 million state chartered credit union serving 9,000 members in 10 counties in southeast Nebraska, with offices in Lincoln and Beatrice. We've been a state chartered financial institution for all of our 87 years. We've appreciated being regulated by the Nebraska Department of Banking and Finance because of the local control, and we've always felt it's given us more of a voice. And one thing, I've always appreciated that we do pay state taxes and contribute to the state's tax rolls. However, year after year, we must use the state's Wild Card Act to continue to do business. An update to the State Credit Union Act will give us parity with federal credit unions, including in the area of our field of membership. The current State Credit Union Act does not address geographical or communities as fields of membership for credit unions, but federal law does, and this bill would codify it then within our state statutes. In 2018, Members Own expanded to serve an additional 8 counties in southeast Nebraska. When we made application to the Nebraska Department of Banking and Finance, we had to again rely on the parity or wild card provision in state law. The Federal Credit Union Act allows geographic fields of membership, which we already had with serving Lancaster and Gage County. While the state regulators review the federal regulations within that context, by codifying this option within our state act, it will allow for equitable treatment for the state chartered credit unions. This update would allow our state regulator to make the decision on any update to our field of membership in relation to our geographically defined communities, but would recognize what field of membership rights we have and more equitably assess future membership requests.
Wow, thank you.
Thank you.
Thank you, Ms. Carter. Are there any questions from the committee? Senator Jacobson.
I'm just curious how many Linda Carters there are.
I got upstaged by Ted Carter, the president of the
I was gonna
university's
say,
wife is named Linda Carter.
You're not the Linda Carter I know. So,
Some
thank
people
you for
call me
being
Wonder Woman.
Additional questions from the committee? Seeing none, thank you very much,
Thank
President
you.
Carter. Good afternoon.
Chairwoman Slama, members of the Banking, Commerce, and Insurance Committee. My name is Ann Loftus. I'm the president and CEO for First Nebraska Credit Union, a state chartered credit union. We're the seventh largest credit union in Nebraska with 183 million in assets, 5 branches in Omaha and Lincoln, and we serve 17,000 members. I'm testifying today in support of LB 710, and I also want to thank Senator Dungan for its introduction. LB 710 modernizes and updates the State Credit Union Act. I'm focusing my testimony on board flexibility and merger requirements. This bill will enable more flexibility for credit union board meetings by allowing for a reduced number of required meetings for credit unions who have been chartered for more than 5 years. It will also eliminate a voting requirement from members of the continuing credit union for a merger, a vote which is not required by the NCUA, the federal charter or federal regulator. As a credit union member, I strongly support these changes. They would allow credit unions to operate more efficiently and effectively by giving credit union boards, which are volunteers elected by and from the membership, greater flexibility in scheduling meetings. This change would permit them to cancel a meeting if there is no business to be conducted. Credit unions would be required to have at least 1 meeting per quarter and a minimum of 6 meetings throughout the year, provided they are not a newly formed credit union. But even with this change, a regulator may require a credit union to hold monthly meetings should they feel it's warranted. Decisions made by the board would still be done in a timely manner based on the schedule of meetings. Furthermore, aligning the voting requirements for a credit union merger with the NCUA guidelines will help eliminate any confusion in having different guidelines and put the state charters on par with federals. Members can still be confident that their interests are being considered because boards from both credit unions would vote on the merger, and the merging members would have the opportunity to vote as well. Only the merging credit union members are impacted by the merger due to the conversion of their accounts into a continuing credit union. This change, it permits more efficiency in the merger process and a less burden on the continuing credit union, which in the end is a better outcome for members. I urge you all to support these changes and thank you for consideration.
Thank you, Ms. Loftus. First question for you. Could you please spell your name for the record?
I'm so sorry. ANNLOFTIS.
Thank you very much. Questions from the committee? Senator Jacobson.
Thank you, Chair Slama. Ms. Loftus, I'm just curious. I don't know that I have any huge objections to that at all. I'm just curious as to why that's in place today and what specifically, and I'm thinking now about the board meetings, what's so objectionable about having monthly board meetings or board meetings more often? What's your major concern with that?
Yeah, the objection would be, well, if we will probably, our credit union would probably still schedule 12 board meetings, but there's a couple months in the year that there is very little on the agenda that we could put the information out to the board, and that would give them some flexibility to do that. Or in the case where we have meetings scheduled the last Monday of the month, and maybe for some reason there was a blizzard, I mean, we do virtual meetings or we couldn't have the board meeting, there's no flexibility at all. We need to have 12 monthly board meetings regardless. And so it just is to put some flexibility out there for a credit union to be able to do that. But at any time, the regulator could still require you to have monthly meetings. If you were, maybe you're a new charter or you financially need to be, maybe you aren't running your credit union as well as yours or should. I don't know what they might see something that they want to have you meeting in person or virtually. And we do both. We have that available to our board members. So.
And I hear that. I appreciate the answer too. I mean, it is a little bit of a catch-22, and I think there are some safeguards back there. And I think you're correct that I think the regulators always want to make sure that they've got the ability to make sure that the board of directors is weighing in, overseeing management operations and keeping a handle. I assume that you share financial information and so on at your board meetings But do you serve cookies though, is a big question, or anything like any refreshments or,
It's like, what's that?
do you serve any refreshments? at
What
your
do we
board
serve?
meeting?
Refreshments? Yeah. Well, not everybody comes, but if they come in person, they do get some sort of snacks, maybe a light lunch or dinner. So that does help them to want to come.
We do
and to
lunch
eat.
just for whatever that's worth. That usually
It's not alcoholic though.
I-
It's,
no,
you
I
know,
won't
coffee
go.
and water and, you know.
I wasn't going down
No,
that.
okay.
Thank you, Senator Jacobson, for that enlightening line of questioning. Additional committee questions? Seeing none, thank you very much, Ms. Loftus. Good afternoon.
Thank you. Good afternoon. Thank you, Chairwoman Slama, for this opportunity to testify before the committee. My name is Dale Kovar. That's DALEKOVAR. I am the Executive Vice President of First Nebraska Credit Union. Thank you for your time, and I want to sincerely thank Senator Dungan for the introduction of this particular bill. First Nebraska Credit Union, as Ann had just mentioned, is 183 million in assets, and we serve the 17,000 members that have joined our credit union. Specifically, I'm testifying to the benefits pre-funding program that is part of the LB 710. This would allow the codification of basically what we're currently doing already in terms of having something called corporate-owned life insurance. So on the banking side, they refer to it as BOLI. This allows for the credit union to invest in various investments that otherwise they would not be allowed to invest in as a way to earn additional revenues to support some of the benefits programs that we provide, such as 401k or medical coverage and whatnot. It is important to note that for our credit union, we're already investing in COLI. It's something that we got special permission from the Department of Banking, and other credit unions do as well. Federally chartered credit unions already have that ability to invest in that. There are guardrails in place in terms of the maximum amount that can be invested in any one type of an investment, 15% of your net worth, or 25% total. So with that, I'll open it up to any questions that the committee might have.
Thank you very much, Mr. Kovar. Any questions from the committee? Senator Kauth.
Thank you, Chair Slama. As I'm looking through the bill, the term financial technology company, can you give me a description of what that is?
The term you might hear most often are FinCENs. So they're going to be the apps that you have on your phone that offer mobile banking, for example. In the credit union world, we refer to those as QSOs or credit union service organizations, of which credit unions together might come pool funds together to start up a financial technology company to provide a service that may not already be available in the marketplace today. And that just allows, again, the credit union to make some sort of an investment in that.
Because the bill talks a lot about the fact that you can invest in them, but so does that 15% or 25% apply to the financial?
Sure, there would be a limit on that as well. Yep.
Thank you.
Thank you, Senator Kauth. Senator Jacobson.
Well, I think maybe a follow-up to that. I thank you, Chairman Slama. I guess my question is, you're talking about benefits of pre-funding program, and you're saying you're already allowed to invest in essentially a BOLI type product. So what are we really talking about investing in here?
It's, well, in terms of what is listed in the proposal, would just allow basically putting it in the Credit Union Act, as opposed to today where a credit union would have to reach out to the banking department to get special permission to invest in that. And actually, we had that issue a couple of years ago where there was some disagreement as to whether or not it was a investment that was allowable. And again, we were looking at the NCUA regulations. It was certainly allowed under NCUA. In Nebraska, we had to get special permission.
Sure. Well, and for the record, I don't know that I have any specific concerns at all about BOLI and the guardrails that are with that. I guess if we were talking about, investing in fintech companies, I'm assuming somebody's going to be lined up to make that testimony. Oh, there you go. I do have a couple questions on that. Not necessarily objections, but I got some questions.
Thank you, Senator Jacobson. Additional questions from the committee? Seeing none, thank you very much.
Okay.
Good afternoon, Mr. Lukenhouse.
Good afternoon, Chairman Slama, members of the Banking, Commerce, and Insurance Committee. My name is Brandon Lukenhouse, Brandon Lutkenhaus, and I'm here on behalf of the Nebraska Credit Union League. You've heard from the credit union testifiers on many of these provisions. I think I'll wait on the financial or the fintech being proposed as a question from Senator Jacobson. But just to kind of recap some of this. Again, I think what our folks are saying here is we have 11 state chartered credit unions with 45 federal charters. So the state charter is not as viable as it could potentially be. And so what this aims to do is really codify state statute. Some provisions bring our state chartered credit unions in par with federals. And then three of these provisions would go beyond what our federals can do today, to your question, Senator. Those three, I'm going to point out those three. Virtual annual meetings. So every year, our credit unions are required to hold annual meetings of their membership. In COVID, 2020, 2021, it became very apparent that virtual meetings could be of great benefit, not only especially to those members that maybe don't want to travel, put themselves in harm's way for viruses or other things, but also for folks who may not be able to make it to a specific place, but could simply join on virtually and attend their credit union's annual meeting. So to us, that makes a lot of sense, but that would be, our federal charters currently today would not be able to do that. They can hold a hybrid annual meeting where they can have virtual and in person, but they could not do a fully virtual. And honestly, I don't anticipate many, if any, credit unions utilizing virtual ongoing. It would be more of this case-by-case basis. Another one would be the board of directors meetings that Mrs. Loftus was talking about. I think the importance with that provision is to understand that credit union board members are volunteers elected by and from the membership. So they're volunteering their time to serve in this capacity. And when there's cases where maybe there's not much on the agenda and the board would rather not hold the meeting and hold it the next month, I think that makes a lot of sense. I think Ann kind of indicated there that her credit union would likely do the monthly meetings, maybe miss one if there's not much on the agenda. That's essentially what this would do. Now, it would allow credit unions to hold no fewer than 6, 1 per financial quarter. And of course, as Ann said, the department does have the ability to require a board to meet if the department deems that to be necessary. The other one would be the fintech provision, and we'll get in on that. But that provision would allow for 5% investment into a fintech by a credit union. But there are guardrails with that, of course, as you see in the bill. A couple other things I want to mention, school branches. Senator Jacobson, you mentioned, is this additional authority currently, I'll just stop there.
Great. I can't imagine we'll have any questions for you, Mr. Lukenhouse. Questions from the committee, Senator Jacobson.
Why don't you finish your last thought here?
All right, thank you, sir. With school branches, currently federals can open up school branches, federal credit unions, as well as state, because they, as Liberty First said, they have 3 school branches. Trias Federal in Kearney area, they have some school branches. Centris has school branches. So there are credit unions that are currently doing, including state chartered credit unions. This would simply codify state statute. Okay, we're just putting it in state statute. It's already being done. The department's already allowing credit unions to do this via the wild card. And the other important thing to understand is we talk a lot about financial literacy amongst the youth and even adults. And to get this kind of habitual savings started when you're young is so very important. And whether it is operated by a bank or a credit union or whoever, it's important for students who are financially vulnerable, especially when they're not getting this type of education or habits started at home, that perhaps they can get that ability in their school. And so I like when I hear that credit unions are opening up branches in these low-income areas. I think that's extremely important, and I know many banks are as well.
Thank you. I made a couple of additional questions. Amazingly, so I mean, you and I are probably on the same page on several of your issues. I don't necessarily have issues with virtual meetings, particularly if you got individual members that can't be at a member meeting, being able to call in or be there virtually, unless the director is concerned about the health of the particular credit union. I don't know if that gives me a lot of indigestion. On the directors, number of directors meetings, kind of the same thing. You talk about their volunteers. Do you pay directors fees? Do most credit unions pay a director's fee?
They do not. They have the ability to pay the treasurer, but most credit unions do not pay the
So it's
treasurer.
purely
Most
voluntary.
of the time, they're all voluntary.
Other than maybe at First Nebraska, I think, did I understand they do alcohol there, or is that just?
I didn't hear, I heard
I didn't know.
coffee,
Oh, coffee. All right. Okay.
and
thank
probably the cheapest coffee.
you. Thank you. Thank you. So tell me a little bit specifically in fintech, what do you have in mind there?
So we know, and I think Senator Jacobson, you know as well, in the banking sector, fintech is becoming very, very important. And not only they can be a disruptor in ways, but they can also be a partner in helping financial institutions to deliver services to their members. And so this provision would allow credit unions to invest up to 5%. There are guardrails. This credit union would have to be well capitalized at the time of the investment. When they take the investment off, or as they invest in this company, throughout that investment, they have to remain well capitalized, and the department would have oversight of both the department, and they could have requirements on these fintech companies. So there are quite a few guardrails there. But what we're talking about might be, so for instance, I just learned about a fintech recently that deals with AI, and the AI allows credit unions to, in a more efficient and better way, to learn the behaviors of their members to determine, are these folks going to pay the credit union back? I mean, credit unions are not for profit, but they're not charity, and so it's important that when they lend their members money out, that the member will pay back that money to the other members. And so this company, for instance, that could be a potential one that they might invest in. Now, I don't know that company would be taking investments, but nonetheless, it could be something similar to that, or it could be online banking, or it could be any kind of underwriting fintech company. But the other important thing about that is the fintech company must be in the business of providing financial services that the credit union can or is using for their members.
Thank you. And I think to that point, so to confirm, you are asking the borrowers to pay the loans back.
We do ask
We have
that,
that in
yeah.
common. I want you to be aware of that. Well, here's probably my main concern. It probably isn't so much, a little bit the actual investment in fintech, because we can access fintech companies without being an investor. My biggest concern probably comes back to, you're talking 5% of your capital, or 5% of capital, or 5% of assets, or what would be your limitation?
It would be, I think it's net worth in the bill.
Okay.
Double
Okay.
check.
And I guess to me, an equity ownership is a little bit different than being a member, or being able to utilize that particular service. I'm not necessarily opposed. I'm kind of one of those that you walk before you run. And, I think banks are dealing with the same question mark out there. And obviously here more recently, some fintech companies haven't done real well. And so it's really a question of, should we be out there in the equity business in fintechs, or should we be observing from the outside or using it through a holding company or some other avenue? So I appreciate that. And I'm just trying to understand more about what you're looking for there. I'd like to try to find common ground where we can. And I think there's a lot of aspects of this bill. There's only parts of this bill I hate, but for the most part, I'm kind of thinking some of it's okay.
Well, there's nothing in this bill that I hate.
Yeah, I didn't think so.
But it is 5% of net worth,
Yeah.
Senator, according
Thank
to the bill.
Appreciate it.
Thank you, Senator Jacobson. Additional questions from anybody? Senator Bostar.
Thank you, Chair Slama. Thank you, sir, for being here. Just briefly, it seems like from the testimony that, yours and what preceded you, that is it fair to say that we're getting to a point where state chartered credit unions are going to be probably converting, if we can't accomplish some of the things that are being requested, converting to a national charter?
I think the state runs the risk of that. I think a lot of this, as we've talked about, there's only 3 provisions in here that federal charters don't have the ability to do. And I can't remember which testifier mentioned the parity or wildcard provision that this committee passes every year, and it's very, very important for both banks and credit unions. The wildcard or parity provision is not introduced every year. It's introduced to be in effect while the legislature cannot act. And so if the federal government does something positive for banks or credit unions or both, the wild card can take care of that while you all are in interim and not here able to act on those updates. But when the legislature returns, the idea is to then update the statutes. That's what much of this is updating the statutes to look like what the federal credit unions can already do and what our credit unions already do via the wild card or parity provision. It's important that this state make a statement, because I mean, honestly, if I'm a federal credit union and I look at the state act and it just doesn't have these obvious updates, it would cause you pause to say, do I want to really consider the state charter when we can't get these, what would essentially be obvious updates?
So, I mean, I certainly don't want to, I don't want to reach a point where we're losing all of our state chartered credit unions, and I get that there's a risk. So I suppose the question to you is, I mean, I'm not sure that this entire bill is something that could get done. But do you think that you would be able with your credit union members to work with folks on the committee to try to find some of the provisions within the bill that we could identify that we could maybe move forward on? That way we're not really jeopardizing the complete abandonment of all state chartered credit unions.
Absolutely. I mean, we are always more than welcome to work with this committee and whoever. I mean, honestly, I've talked to the Bankers Association about this bill as well, and there's a provision that maybe they're interested in at some point, could be now. And I've talked to Senator Dungan about that specific issue, and we'd be happy to amend that onto this bill to help them as well. We're very amenable to things. We just want to get things done that is right for credit unions and their members and makes sense to the state.
Thank you very much.
Thank you.
Thank you, Senator Bostar. Additional questions from the committee? Seeing none, thank you very much, Mr. Lukenhouse. Additional proponent testimony for LB 710. Seeing none, we'll now open it up for opposition testimony for LB 710. And if you are planning to testify in opposition, please come up towards the front. Save us some transition time. Good afternoon.
Good afternoon, Chairman Slama, members of the committee. My name is Bob Holstrom, Hallstrom. Appeared before you today as registered lobbyist for the Nebraska Bankers Association in opposition to LB 710. I'll start my testimony by indicating that we have in fact visited with Senator Dungan, indicated the areas in which we object or oppose to the bill as introduced, as well as some of the provisions that we do not take exception to. We've also shared that with the Credit Union League as well. And while we do have a number of concerns, what I'll focus on today are 2 primary objections. The first one has to do with the in-school branching. Certainly we support in-school branching activity by banks. I think there's over 25 banks in the state of Nebraska that are currently having branches in the schools. But we have some legal concerns. The first one is whether you're a state or federally chartered credit union, if the program is structured such that the school is the depositor, we have a state constitutional prohibition against those entities taking an ownership interest in a private corporation, which is what a deposit and a member share is all about with regard to the credit unions. Second issue, as Senator Jacobson noted, is that if the student itself is the depositor, unless you happen to be a community chartered credit union, those students would not be eligible to be members of a associational or occupational credit union. The next issue has to do with expanding the community chartered credit union authority under state law. It is correct and accurate that the wild card has been used on occasion to allow community chartered credit unions to be established or to be expanded at the state level. However, we have consistently opposed bringing that into state law for this reason, and that is that the standard proposed under LB 710 is different than the standard on the federal level, both in terms of its actual statutory language and the fact that there are regulations and policies of the NCUA that further, at least on their face, if not on their application, are designed to further restrict the ability. The language in the Nebraska statute is somewhat similar to that of Iowa law, which limits credit union community charters to geographic boundaries. That language has been used to allow two credit unions, Cobalt and Viridian, out of Iowa to make inroads and establish operations in the state of Nebraska. And so for those reasons, we would oppose what Mr. Lukenhaus was referring to in terms of something that the banks might be interested in. We need to canvass our bankers to see if they too would be interested in removing the branch hearing and notice requirements for branch applications. And if we are, we would certainly come back next year, either as part of this bill, if it's to move forward in any respect, as Senator Bostar suggested might be available, or otherwise.
Thank you, Mr. Hallstrom. Any questions from the committee? Seeing none, thank you very much, Mr. Hallstrom.
Thank you.
Good afternoon.
Chair Slama, members of the committee. My name is Brian Morrow, BRIAN-MORROW. I'm Chief Risk Officer and Vice President of Pinnacle Bank Corp. I'm here to testify in opposition of LB 710 on behalf of the Nebraska Independent Community Bankers. Thanks to Nebraska Community Banks, our state has an unbanked rate of just 3%. Well below the national average of 4.5, which puts us in the top quarter of states, according to the FDIC. Additionally, according to the FDIC, Nebraskans on average seek out payday loans or other type of high-interest short-term financing far less than citizens of other states, which again speaks to the presence and strength of our community banks and their ability to serve Nebraskans' financial needs. I mention this as a preference of our opposition of LB 710, which would expand credit union membership requirements because it is evident there is no financial need in the state that this expansion would address. To be clear, there are pieces of LB 710 that we have no opinion on, such as updates to allow electric notice to the department and allowance of virtual board meetings and such. However, there are pieces like membership criteria expansion that we do oppose. Current state law intent is clear that credit union members are to have some sort of association with each other, specifically occupation or education. We believe expanding membership allowance to persons or organizations within a geographic community goes beyond the intent, and as drafted would allow credit unions to now open to all small businesses in the community without regard to common connection or association. Additionally, we find the language of LB 710 authorizing credit unions to invest in financial technology companies a bit concerning due to the fact there's no requirement that a financial technology company must offer a product or service that is beneficial to the credit union's membership. LB 710 would allow credit unions to invest up to 5% of capital in shares of fintech companies. It's unclear to us if this is 5% in aggregate capital or per company. Regardless, it's our opinion this doesn't align with safe and sound risk management. Federal banking regulations, with a few exceptions, prohibit banks from investing in stocks or shares of other companies. These restrictions exist to minimize the risk of the balance sheet and protect depositors, to name a few. Finally, we strongly oppose the very last two lines of LB 710 that attempts to repeal the 18% cap on loan interest rates that the state credit unions are authorized to assess. We would point out to the committee that the federal credit unions attempted earlier this year to raise the 18% cap, but were denied by the National Credit Union Administration. We appreciate the opportunity to express our opposition to LB 710. we would ask the committee not advance the bill any further. I want to thank you for your time, and I'm happy to answer any questions the committee might have.
Thank you, Mr. Morrow. Are there any questions from the committee? Seeing none, thank you very much. Additional opponent testimony for LB 710. Seeing none, we'll now open it up for neutral testimony on LB 710. Good afternoon.
Chairperson Slama, members of the Banking, Commerce, and Insurance Committee. My name is Tag Herbeck, T-A-G-H-E-R-B-E-K. I am Financial Institutions Counsel for the Nebraska Department of Banking and Finance. I'm appearing today on behalf of the department in a neutral position regarding LB 710. Director Lammer's schedule didn't allow him to be here today. He is off growing Nebraska. The Nebraska Department of Banking and Finance enforces the Nebraska Credit Union Act, which was updated and amended by LB 710. The Nebraska Credit Union League brought this proposal to the department prior to its introduction. We appreciate the league's consideration of our comments. LB 710 impacts our 11 state chartered credit unions. It will have no effect on the 45 federally chartered credit unions located in Nebraska. Section 5 of the bill proposes amendments to the credit union branching statute. First, state chartered credit unions would be authorized to establish student savings programs at schools that have students in a community where the credit union has an office. Currently, there are over 50 Nebraska schools participating with financial institutions to offer these programs, which teach young people how to save and the basics of managing money. The department has been a consistent supporter of school saving programs as part of its financial literacy efforts and believes that increasing the potential number of participating institutions and students can only benefit the future of the state. Also in Section 5, the bill attempts to remove the ability of the department to hold hearings in connection with credit union branch applications and when a credit union proposes to change its bylaws or articles of association. For branch applications, current law provides for an administrative hearing if the director determines it is warranted by the credit union's financial condition. If the condition does not warrant a hearing, the department is required to publish a notice in the county where the branch is located. If a substantive objection is filed with the department, a hearing is scheduled. LB 710 would remove both the discretionary authority of the director and the publication requirements. As described in our fiscal note, these provisions have been used sparingly as there have only been 4 applications for credit union branch offices in 2012, since 2012. In all of those cases, the publication only route was used. There were no objections and no hearings were held. We believe the provisions should be retained as they could be a valuable tool in fully exploring an applicant that may not be in the strongest financial condition, and because of the notice promotes transparency. The department also believes hearing provisions should be retained for possible bylaw and article of amendment changes, as it is beneficial for the department to gain as much knowledge as possible in order to make an informed decision. American administrative law is built upon the premise that all persons potentially affected by a government action should be able to voice concerns in an accessible forum. Therefore, removing hearing opportunities may work to the detriment of all participants involved. LB 7. I guess I'll stop there.
Mr. Herbeck, you may finish your very
All
last
right.
thought there.
LB 710 would authorize well-capitalized credit unions to invest in financial technology companies. It appears sufficient safeguards will be put in place for this type of investment, such as a cap on the investment and a contractual limitation on liability. As set out in our fiscal note, this addition to the Credit Union Act could add procedures and time to department examinations. Any additional time would vary based on each investing institution and would be billed to the credit union.
Thank you,
and
Mr.
I'll take any
Herbeck.
questions.
I appreciate your respect of the red light.
I saw that red light.
Questions from the committee? Senator Bostar.
Thank you, Chair Slama. Thank you, sir, for being here. Could you speak more to the geographic provisions that you were speaking about? Could you just expand upon that?
This would basically codify what's already available through the wild card. That's pretty much it.
Thank you.
Thank you, Senator Bostar. Additional questions from the committee? Seeing none, thank you very much. Additional neutral testimony on LB 710. Good afternoon.
Good afternoon, Chairwoman Slama, members of the committee. I'm Dr. Jennifer Davidson, JENNIFER DAVIDSON.
I wear 2 hats at the University of Nebraska Lincoln. I'm an economics professor, and I'm president of the Nebraska Council on Economic Education, which is a separate nonprofit housed at the College of Business. The in-school savings programs, the school branches we've been talking about today, are one of our signature programs. I'm also the author of the research study on in-school savings programs cited earlier by Ms. Schreiner in her statement today. So I'm here to comment on provision 21-1725.01, paragraph 3 of LB 710 and no other part of LB 710. I'm here to provide additional information on the research on the programs. I brought copies of the published articles for each of you. The results of the long-term study of Nebraska's in-school savings programs show that in-school saving program participants, compared with non-participants, are more likely to have a bank account in high school and to have opened that account before attending high school. Further results show that students with bank accounts are more likely to save regularly, indicating that participation in the program contributes indirectly to saving regularly through its direct influence on getting students to open a bank account and to open it early. This type of hands-on experience, rather than reading or talking about a subject, is a very effective education strategy. These in-school savings programs fit squarely and support the Nebraska Social Studies standards. In kindergarten, students will recognize money is used to purchase goods and services and satisfy economic wants and needs. In first grade, students will compare spending and savings opportunities. In second grade, students will demonstrate knowledge of currency, its denominations, and use. In third grade, students will evaluate choices and consequences for spending and savings. And in fourth grade, students will investigate various financial institutions in Nebraska and the reasons for people's spending and savings choices. Given all the positive outcomes from the in-school savings programs, we need more of them. We need all Nebraska students to have an opportunity to participate and get this type of real-life, hands-on banking and savings experience. There are roughly 560 elementary schools in Nebraska. We currently have 50 programs. We need more partners, not less. We need more financial literacy, not less. With that, I will conclude. I thank you for your time today. I'm happy to answer any questions you have.
Thank you, Dr. Davidson. And as a student who benefited in high school, both from your work in K through 12 education and in your work with FBLA, thank you very much for that and for being here today.
Thank you.
Questions from the committee, Senator Cowell.
Thank you, Chair Slama. Do you teach them how to use cash? Like counting back change and
Yes,
things like that, and actual
absolutely.
cash as
Yes.
well?
I
Okay,
know that's a
the
big
Monopoly games now don't use cash, they use credit cards, so I just wondered. if
Yeah.
you were
Let me
using that.
state, this is a cash bank. Students are bringing cash from home. It is real cash.
Thank
It's
you.
money that they've saved, earned, did extra chores. It is real money.
Awesome, thank you.
Thank you, Senator Cowell. Senator Ballard.
Thank you, Chair Slama. Thank you for being here. What other barriers do you see for participation? Is it just sponsors?
It is a big undertaking for the financial institution, and you have to have a commitment from the school. So you really do need this perfect storm of everybody on board to move forward as we hold the hands of the school and the financial institution. It's a 6-month to year-long planning process. When I'm talking to them about it, it's a marriage, it's not a date.
Thank you.
Thank you, Senator Ballard. Senator Jacobson? No? Oh,
Yes,
okay.
yes.
Oh, yes, got it.
Oh, yes. And there's a question in here too.
Oh, boy.
Thank you for your testimony. I really appreciate the fact you're asking them to open bank accounts. So that really is music to my ears. But I guess I would just concur with your presentation that we do need more and more are coming. And not only do we need it at these lower levels, but we really need, I know the Bankers Association has promoted financial literacy really at that higher level. My bank is very actively involved in doing Nebraska University, which is a training of that these juniors and seniors in high school are getting before they go off to college. Probably the one thing we hear more than anything is I wished I'd had this training 2 or 3 years earlier. So I couldn't agree with you more about the need for financial literacy. I just think my only concern is we got to do it right, and we got to make sure we're all staying in our lanes. But yes, I think we're going to continue to see that expand significantly. So thank you.
Wonderful.
Thank you, Senator Jacobson.
Was there a question?
No, there was
There wasn't a question. Your name's not Linda Carter, though, right?
No, it's not.
All right.
There's a question.
There's a question.
Additional questions, Senator Von Gilleren.
Yes, thank you, Senator Slama. Thanks for being here today. Quick question, and I'm not asking for school district names. Are most of your 50 programs, are they large districts, small districts, urban, rural?
Yes.
All of those? Oh,
Yes.
fantastic. Okay, all right. And what is the biggest, I think, to the question that Senator Ballard, what's the biggest challenge you have getting into those school districts?
Truly, the biggest is commitment, realizing that it's long-term. They need a person at the school that's going to shepherd that program. And then the other current inhibitor is my time to shepherd the many that are, we opened 14 this year, which is unheard of.
Very good, thank you.
Thank you, Senator Von Giller. And additional questions from the committee? Seeing none, thank you very much, Dr. Davison. Good afternoon.
Good afternoon. Chairwoman Slama, members of the Banking, Commerce, and Insurance Committee. My name is Steve Edgerton, STEVE-EDGERTON, Government Affairs Officer with Centris Federal Credit Union. So I wanted you to catch that because I guess this is the contrast. We're a federal credit union that currently serves a portion of the Omaha Council Bluffs MSA. The counties we serve in that currently are Douglas, Sarpy, Pottawatomie, and Iowa. Additionally, we serve Lincoln County, that includes North Platte, and that was a result of a merger with a telephone credit union some may actually be 40 years ago. I think I said 30 in here. Lincoln County at that time, when we became community-based in 2000, was classified as an underserved area, and so we were granted that county, which helps keep that branch going. We added McPherson County as a result of a requested merger by a regulator in 2018. We still have that office open. Tryon, Nebraska has 107 people, but we're keeping it going three days a week. We also have a branch in Grand Island. That was a result of a requested merger by a regulator also. When we became community charter, we were grandfathered 10 small employee groups that that credit union had, but we did not get community base for Hall County as example. We've managed to keep that office going. It's about 25 million in assets, but it doesn't grow a lot, but we're serving the existing base it had. At year end 2022, we had 1.2 billion in assets. 49,000 and a few extra loans for 992 million. That puts the average loan under 20,000. Member deposits of 918 million. Average per member was $7,275 for the 126,000 members we have. We have 289 full-time employees and 23 part-time. 2 branches. We have a branch, one in North Platte, one in Grand Island, Tryon, as I mentioned. We have 2 branches in Pot in Iowa and 10 in Douglas and Sarpy. I'm testifying in neutral capacity. As any business, we continually monitor the difference between state and federal regulations, rules, statutes, et cetera. And I've been asked in the past and done the studies for our credit union. Are there some advantages to be a state chartered credit union? 710 goes a long way in starting to get that. But what I can tell you is it's more advantageous for us to be a federal credit union today. So we hope that the state continues to progress. I think the biggest issue that people would say is, well, it's the tax issue. And I will tell you the franchise tax, the deposits tax, and sales tax. When we do our analysis, that's the biggest part. And that's 15 full-time employee equivalents. So with that, I'll answer any questions.
Thank you very much, Mr. Edgerton. Are there any questions from the committee? Seeing none, thank you very much. All right, additional neutral testimony on LB 710. Seeing none, Senator Dungan, you're welcome to close. And as you approach, for the record, we had 2 proponent letters for the record on LB 710.
Thank you, colleagues. It's a long day. I know we have a lot of other bills. I won't take a lot of time. I appreciate all the testimony we've had here today, both from the proponents and the opponents and the neutral. I think the through line that's evident is that we have a number of state charter credit unions who want to stay state chartered. One of the things we talk about a lot as a committee is ways to encourage state charter banks. I've understood more and more as I've been a member of this community the importance of keeping entities state chartered. I think it's good for our state, it's good for the people in Nebraska, it keeps the money in the state. So I think what this really does is it seeks to incentivize or encourage the credit unions that are currently state chartered to remain state chartered. And I would hope that down the road, respectfully to Mr. Edgerton, we could see more of the federal credit union state charter. I think that's going to be good for us as a state. I understand there's a lot of different competing interests here. Mr. Hallstrom is correct. We did talk multiple times prior to today's hearing. We're going to continue to talk. My hope is that moving forward, we can, as we've indicated, come up with some consensus items on here. I think Senator Bostar hit the nail on the head, though, that it's important that we try to come up with the things in here that are good for everybody. I would encourage you all to take a look at that handout that was received with the breakdown of the legislation from the Nebraska Credit Union League. I think that does a very good job of going through issue by issue and talking about what the modifications are and what the reason for the change is. If anybody has any questions and wants to speak with me more about that, I'm happy to have conversations with everyone, but I just hope we can come to some consensus here and do what we can to encourage further state charters. With that, I'd urge your support of 710, and I'm happy to answer any other questions.
Thank you, Senator Dungan. Are there any questions from the committee? See none. Thank you very much. This brings to a close our hearing on LB 710, and we'll give the room a moment to turn over before we open our hearing on LB 778. Senator Bostar.
Sorry?
Okay.
No.
I'm proud of you. You're growing. You're evolving like a butterfly.
I think Van Gillen is still a little concerned.
I was just gonna call you out for not asking any questions.
Yeah.
Clearly said you were going to.
Then like promising a question and then going around.
I know.
You hadn't made the
I
promise.
just want to make sure you're paying attention.
I appreciate that.
Want me to start that, George? Have a seat. Yeah. Thank you. Thank you. Okay, well, we're gonna keep moving. We'll move on to opening a hearing on LB 778. And Senator Bostar, floor is yours.
Good afternoon, fellow members of the Banking, Commerce, and Insurance Committee. For the record, I'm Elliot Bostar, that's ELIOTBOSTAR, representing Legislative District 29. Here today to present LB 778. Following the passage of LB 767 last year and prior to its January 1, 2023 effective date, Nebraska pharmacists learned that the Department of Insurance, based on the definition of a health benefit plan health carrier contained within LB 767, adopted a narrow interpretation of the scope of PBMs covered by the Act. Specifically, the department indicated that LB 767 did not apply to employer-sponsored plans, insured or self-funded, or to the Medicaid program. To address the narrow Department of Insurance interpretation, LB 778 would clarify the definition of health benefit plan under the Act to ensure it applies to employer-sponsored plans, whether insured or self-funded, and to the medical assistance program. A lot of time was spent and numerous meetings were held involving representatives of PBMs and provider groups prior to reaching consensus on the provisions of LB 767 to authorize the Department of Insurance to regulate PBMs. It was the clear intent of all parties involved in the negotiation of the final version of LB 767 to apply to all PBMs providing services to healthcare plans, including employer-sponsored plans, whether insured or self-funded. LB 778 also addresses the several other aspects of the PBM business practice. Section 3 would extend the appeal, investigation, and dispute resolution process to reimbursement for a specific drug or drugs made under a maximum allowable cost price at below the pharmacy acquisition cost. The bill would also require PBMs to pay pharmacies a fair price on medications they dispense to patients. Pharmacies are receiving insufficient reimbursements while PBMs are posting record earnings. The dollars generated for rebates, audits, and below-cost reimbursements are not being passed along to the patient or the pharmacy. Section 4 of LB 778 prohibits PBMs from requiring credentialing that is more stringent than what the state requires for pharmacy licensure as a condition to participating in a PBM pharmacy network. Prior to the passage of LB 767, PBMs imposed more stringent credentialing requirements for participation in a specialty pharmacy network. While LB 767 addressed the specialty pharmacy network issue, LB 778 proactively prohibits similar action for other PBM pharmacy network activities. Section 5 would prohibit PBMs from steering beneficiaries to use pharmacies directly or indirectly owned by the PBMs and from paying network pharmacies less than the amount of reimbursement provided to PBM affiliated pharmacies. These practices steer pharmacy customers away from their local pharmacy to a more costly out-of-state PBM affiliated mail order pharmacy. Section 6 of LB 778 imposes a fiduciary, good faith, and fair dealing requirement for PBMs. PBMs have faced state regulatory scrutiny and pharmacy lawsuits because, as a result of their position in the market, they have an opportunity to retain rebates and discounts rather than passing savings on to consumers for health plans. These practices can create a conflict of interest for PBMs in dealing with pharmacies, health plan sponsors, and pharmacy patients, and may result in higher drug prices for patients and lower reimbursements for pharmacies. The duty of care established for PBMs under LB 778 would, in the event of a conflict between the parties served by the PBM, provide that the duty of care runs first to covered persons, next to providers, and finally to health benefit plans. Finally, Section 7 would prohibit utilization of a spread pricing model by PBMs and would require a PBM to disclose to health plans that spread pricing is not authorized under Nebraska law. Spread pricing increases the profits of PBMs to the detriment of health benefit plans, providers, and their patients. While the PBMs will likely charge an administrative fee if spread pricing is eliminated, the administrative fee would be preferable to the continuation of PBM spread pricing practices. In a spread pricing model, the PBM keeps a portion of the amount or spread between what the health plan pays to the PBM and the amount that the PBM reimburses the pharmacy for a patient's prescription. With that, I thank you for your time. I encourage you to support LB 778. Be happy to answer any questions you may have. I will also note that there will be a number of individuals that they are eager to tell you more about all of the provisions I've outlined.
We're getting that sense. Thank you, Senator Bostar. Questions for Senator Bostar from the committee? Okay, seeing none, thank you. I assume you're gonna, of course you're gonna.
I'll stay close.
Sure you will. I'll ask for proponents. Are there any proponents?
Good afternoon.
Good afternoon.
Members of the Banking, Commerce, and Insurance Committee, my name is Marcia, M-A-R-C-I-A, Muting, M-U-E-T-I-N-G. I'm a pharmacist and the CEO of the Nebraska Pharmacists Association, as well as a registered lobbyist. I offer our support for LB 778 and thank Senator Bostar for introducing this legislation. As a bit of a background, when pharmacies began submitting claims electronically for prescriptions, PBMs were an important partner. PBMs were positioned as the conduit between the pharmacy and an insurance company for prescription claims. Prescription claim data submission was standardized such that all PBMs use the same format for the data. When a pharmacy submits a claim electronically, it receives a message from the PBM within seconds to confirm that the patient is eligible, covered, that the medication is covered, and what the patient's cost is, as well as the amount the pharmacy will be reimbursed or the pharmacy receives a rejection message. This instant adjudication of a claim was the original purpose of a PBM. PBMs collected a fee for this service from the insurance company. Over the last 30 years, however, the role of PBMs has ballooned to much more than processing pharmacy claims. What is more interesting is that 80% of the prescription claims processed in the United States are handled by 3 PBMs. Even more interesting, many insurance companies own their own PBM, and the top 3 PBMs in the United States are listed as Fortune 15 companies. Now PBMs collect rebates from drug manufacturers, they conduct predatory audits, which have become a profit center, reimburse pharmacies at below cost rates, and offer contracts to pharmacies which are not negotiable. Pharmacies are receiving underwater reimbursements, and PBMs are posting record earnings. The dollars generated from rebates, audits, and below cost reimbursements are not being passed along to the patient. Since 2019, over 30 pharmacies have closed their doors in Nebraska alone. Many of these are in rural areas. It's time for Nebraska to regulate PBMs, and this bill is the first step to preserve patient care for patients in Nebraska pharmacies. We have lined up a number of speakers who are passionate about providing care to patients. They are pharmacists who want to share their real-life stories about how PBM practices have impacted their patients and businesses. Thank you for the opportunity to testify. I'm happy to address any questions.
Thank you very much for your testimony.
Sure.
Questions from the committee? Yes, Senator Von Gillard.
Good afternoon. Thanks for being here today. Just a couple of quick questions. As I'm reading through the statement of intent, there's a couple of comments about this would protect pharmacies from being paid below their cost of acquisition and prohibits a pharmacy or PBM from reimbursing an amount less than the amount due, or the amount the pharmacy benefit manager reimburses the plan affiliate for the same pharmacist services. Is there not, and I think it's a pure capitalist coming out of me, is there not a little bit of risk to every business? To me, in a business, you commit to providing a service or a product, and you commit to a price, and then how you acquire it is not the consumer's concern. This seems to take all the risk out of the pharmacist, in that they are certain that they can purchase the products and sell them for a profit, which is their business. There's no bad in that, but that seems to eliminate any risk. Am I reading that correctly? Or
I agree with what you're saying. However, would you sign a contract if you don't know what the cost you'll be reimbursed at will be? Would you sign a contract?
cost that you would be
If
reimbursed?
the cost isn't transparent to you, what you would be reimbursed for the cost of goods.
Well, I did that for a long time.
That's the question.
In the
That's the
construction
question.
industry, yeah, I did, because
So-
you couldn't quantify necessarily what future costs would be, so you made your best guess effort.
And it's
And
not
we took a
future
lot of
costs,
risks.
it's current costs.
Yeah.
We have contracts that set prices. There's no negotiating. And if the cost is below your cost, you eat it. And I think that's why there's a lot of folks here that are, their family businesses relied on fairness in reimbursement. And you can only fill so many prescriptions at a loss before the business is no longer profitable.
Well, listen to the other testimonies. Maybe
Yeah.
the key to this is the reimbursement process and the timing on that. And maybe
I
I'll have a
think it
better
is.
understanding of that.
I
as
think
the
it is.
Testimony continues.
One of the provisions in particular, if you're not familiar with prescription pricing, maximum allowable cost is an average cost for the reimbursement of generic drugs. And if the proprietary calculation of the cost of a generic drug from a company, a large company, which you cannot negotiate with, is below your cost or below the cost you can purchase it at, do you turn those patients away? That's a question. But yeah, I'm certain, I have no doubt that the folks
Thank you.
behind me are going to be able to elaborate a little bit more.
Thank you.
Thank you, Senator Von Giller. And additional questions from the committee? Seeing none, thank you very much.
Thank you.
Good afternoon.
Good afternoon, Senator Slama. Glad to see you came back because I have you as my introduction. Senator Slama and members of the Banking, Commerce, and Insurance Committee, thank you for allowing me the opportunity to testify this afternoon on LB 778. My name is Brent Gollner, BRENTGOLLNER. As a pharmacist and owner of Keith's Drive-In Drug in Hastings, Nebraska, I felt it's imperative that committee members hear about the role of pharmacy benefit managers and the relationship that they play in the landscape of pharmacy in Nebraska today. First, I need to explain a little bit more on what Marcia said. PBMs have a role that they play in our healthcare system, obviously. PBMs were created as middlemen to reduce administrative costs for insurers, validate patient eligibility, administer plan benefits, and to negotiate costs between individual pharmacies and health plans. Sounds like a win for all of us, but PBMs have been allowed to consolidate into a system that now the top 3 PBMs control almost 80% of the prescription drug market. In addition to each of these PBMs, most of them have a mail order component that competes directly with Nebraska's very own pharmacies. This vertical integration and lack of transparency have led many states to enact PBM legislation very similar to what we have today to address these egregious business practices and level the playing field for pharmacists and patients. The PBMs will argue that they are saving patients money and that if this legislation passes, premiums for businesses and patients will increase. An analysis done by the National Community Pharmacists Association, based on data from the Kaiser Family Foundation, has found that meaningful PBM reform in states that have enacted it can actually decrease premiums for patients and businesses in our state. PBMs have tremendous control over patients' prescription drug benefits. They design formularies and provider networks, giving them outsized influence over the medications and pharmacies that patients may choose. PBMs, in their desire to steer patients to their own mail-order pharmacies, are responsible for the rising cost of prescription drug benefit costs. Limiting these conflicts of interest helps patients by empowering them to make healthcare decisions for themselves, decreasing their out-of-pocket costs, and protecting access to community pharmacies in rural areas throughout our state, all without raising health insurance premiums. Meaningful PBM legislation ensures that patients have access to medications prescribed by their doctors and dispensed by the pharmacy of their choice. Thank you for your opportunity this afternoon.
Thank you very
Questions?
much.
Yes.
And I was very glad to make it back for your introduction.
I'm glad you were too.
Questions from the committee? Senator Jacobson.
Thank you, Chair Slama. I guess if you could maybe, I know I've spent some time really studying this whole PBM issue, and I know there's several fronts, and I appreciate Senator Von Gillern's questions because this can be a little complicated. And but if you were going to pick out the one biggest problem that you see with PBMs, what would that be?
Probably the vertical integration that's occurred. As Marcia mentioned, many of the insurers own their own PBM. And even though they tell you they're not going to steer patients, I have had patients on numerous occasions come in and say, I'm being called saying you can save 2 months worth of prescription copay, for instance, by using our pharmacy mail order as opposed to going to your local pharmacy. That's probably the hardest thing that pharmacists are dealing with today. And the pricing aspect of it, I think that you mentioned earlier, the things that go on with that where we're paid below cost is extremely difficult when you don't have an opportunity to actually know what your costs, what they're going to pay you on for a value of a medication. So those would be kind of the 2 big things, I think.
And to that last point, I think most retail pharmacies are buying their pharmaceutical supplies through a wholesaler, and I presume there's some volume and so on that goes with it. So if I understand this right, the concern that most pharmacies would have is that if you're a smaller pharmacy, perhaps can't deal in the volume. If you're not able to provide a price that is at the same level or below what these PBMs could access it through their own integrated pharmaceutical partners, then you're going to be back to what was indicated before. You're going to sell at a loss, or you're not going to stock that particular drug or turn away the patient, and then they have to go somewhere else and you lose them as a patient. Is that kind of your sense of how it works?
Correct, to some degree. Most pharmacies are in an association of groups of pharmacies that they purchase in a buying group, for instance. So our group has about 2,500 members that is in it. So I think we can buy fairly close to as low as some of the maybe chains would You think of the Walgreens, the Walmarts, the CVSs as examples. Most of those are affiliated with an insurance company. So they have a good idea of what they're paying for their product, whereas we don't necessarily know that part of it. So, but yes, I think we can compete on a level. We just want it to be a fair level. If that helps answer your question.
It does. And again, I share the concern. Obviously, I'm a rural state senator. I care about keeping those pharmacies and keeping that service level there. Get a little nervous about mail order. I always worry a little bit about what you're getting and whether it's getting lost or stolen or so on, and having a pharmacist there to explain to you firsthand how that works seems to be an important aspect that people are willing to pay for. But I just wanted to confirm kind of the concepts, because I know there's several issues that are here, the spread pricing, and I'm guessing there'll be other testifiers, and we can probably dig in one at a time and unpeel this onion.
Sure.
Thank you.
Thank you, Senator Jacobson. Additional questions from the committee? See none. Thank you very much.
Thank you.
Good afternoon.
Thank you, senators and committee, for being able to testify today. My name is Gary Rahanek, G-A-R-Y-R-A-H-A-N-E-K. I come to you today as, first of all, as a citizen of Nebraska and a normal customer of our Medicare system. I am also a retired pharmacist. Used to own Waggy Drug, which is now owned by Kohl's. My favorite pharmacy, which is where I love to get my prescriptions filled. Last fall, I'm on insulin. I take Toshiba, or I did, and talking to Mr. Cole, as we always do, because I like to hear about the business, he informed me that the DIR fees had gone past the cost of the medication, and he was losing $120 every time he filled my Toshiba. So I could not ask him to continue to do that. So I asked for generic, found out Toshiba was generic. Optimum RX, which is the PBM we're dealing with in this case, United Healthcare is the insurance. They're all intertwined. Refused my generic request, saying I had to have brand name or prove that I had an anaphylactic reaction to Toshiba, which I would have an anaphylactic reaction to the generic. I'm not that uneducated. So the thing that became obvious to me was, number one, the PBM gets a kickback from the company that makes Toshiba. Number two, they're able to charge the pharmacy 10% on the direct and indirect remuneration fee, which meant they took $375 away every time they filled that thing. I don't know where that money went. And so those things affected me. I could no longer, go to my favorite pharmacy. I spent 4.5 hours on the phone with 4 different United Healthcare people. Nobody knew what a DIR fee was. Nobody knew what pharmacy I could go to that would be able to be reimbursed adequately. Their only suggestion was to do mail order, which I told them, have you ever received a biological through the mail? I wouldn't. You have no guarantee that it's been kept at the proper temperature. The thing of it is, a 3-month supply of this stuff costs $3,500. So if it gets run over by a mail truck or frozen or too hot and it's not any good, Optimum RX is not going to replace it. And so then I have to pay $3,500 to get medicine so I don't have blood sugar issues. So that's just the tip of the issue, but that's what I, as a consumer, have had to deal with.
Well, thank you very much, Mr. Rahanek.
Mhm.
Are there any questions from the committee? Senator Kauth.
Thank you, Chair Slama. You had mentioned the DIR, and then you did say direct and indirect remuneration. Can you walk me through what that looks like?
If I knew.
Okay. I'll ask again.
There may be some other people that can behind me that I know just enough to make me dangerous about it and upset, okay?
Thank you.
It's just a fee that just, it's between 1% and 10%, and it's been rising up to 10%. And the stuff that I was able to get from the Kohl's computer department, the ones that are all 10% are Humira, Xeljanz, all of your brand name insulins. I mean, they just hit the top ones. Some of them, they're taking almost $1,000 back on. Yes, sir.
Thank you, Senator Kell. Senator Jacobson.
Thank you, Chair Slama. If I could dig in a little further, okay, you're telling me that you're on Medicare now?
Yeah.
Okay, I should get in early.
I'm a lucky American, ain't I?
You must got in early.
No, I'm 70 years old.
I guess to kind of walk us through, so you're on Medicare and you have a physician.
Yes.
Okay, and I'm just kind of want to peel the onion back here a little
Right.
bit. You have a physician who's prescribed this medication to you.
Yes.
So that physician has said this is the medication to be on.
Right.
So why can't the physician prescribe a generic?
He did.
And so how did United Health get involved?
They let me have 1 month's supply, then denied my request.
And United Health was in that role because they're
They're primary, they're the health insurance side of it.
For Medicare.
For Medicare.
Gotcha.
Mm-hmm.
So then they decide that they're going to have this program where one of their PBMs are going to, or one of their companies are going to be involved in actually selling you the prescription drug that that they're saying you need, because you have to have the.
Well, they're just saying it is a non-formulary product. It's a nice way of saying, no way, Jose. I also receive every month a phone call from Optimum RX offering me free home delivery for all of my prescriptions. I also received a letter after my last call to them, which was a 4.5-hour call for people. And it has right on it United Healthcare, Optimum RX, the PBM Optimum, and saying they'd be happy to fill by mail all of my prescriptions for me. I would have no problem.
Wow.
So I have that in here. I didn't make copies for you, but would you like that?
I'm assuming they're not going to deliver your groceries to just the pharmacy, so.
Thank you, Senator Jacobson. Senator Dungan.
Thank you, Chair Slama, and thank you for your testimony. Oh, I have a question for you real quick. Okay. Sounds like, I mean, if you want to go, you can. That's, what I appreciate is it feels like you bring a unique perspective, both as a participant receiving drugs and also somebody who's worked in the pharmacy industry. One of the things we heard from the Nebraska Pharmacists Association is that over time, the PBM's role has changed, and that the PBM sort of started as this go-between, but it's ballooned, I believe was the terminology they used. Did you yourself see sort of an evolution of the way that PBMs operated in your time that you worked in the pharmacy industry?
Yes. Yes. So if you can imagine, I quit 5 years ago. And so even at that time, it was really starting to ramp up then. But prior to that, the fees were like 1%, 2%, which is sharp because it's like putting a frog in warm water and then heating it up, right? Because you don't pay attention to it. Well, then finally, when you get sharp enough, here's the other thing is these fees come like up to 6 weeks to 3 months later. So, I mean, you've got to be on your game to keep track because they just subtract it from your payment. So you've got to go through every payment to see what money they took back.
Did something change in the last 5 years to sort of create that modification of their role, or is that just something you observed?
I think it is something that they initiated and saw they could get by with 1%. And then they just, once you're greedy, you just keep going until somebody yells. Okay? Now, I'm a capitalist at heart. And, but this is just totally unfair. To tell you they're gonna pay you something and then take 300 and some bucks back or $1,000 back.
Thank
3
you.
months later.
Thank you. I appreciate that perspective.
Thank you, Senator Dungan. Additional questions from the committee? Seeing none, thank you very much for being here. Additional proponent testimony on LB 778. And my request is if you're planning on testifying on LB 778, please make your way up towards the front of the rows so we don't have staring contests for who's testifying next. Good afternoon.
Good afternoon, Chairman Slama and members of the committee. My name is David Cole, David Kohl. I'm a pharmacist and member of the Nebraska Pharmacists Association. My family owns Kohl's Pharmacies. We have nearly 200 employees and are celebrating our 75th year serving Nebraskans. About 2 years ago, Kohl's started turning away some patients' prescriptions when we realized the cost of the drug was greater than the amount the PBMs paid for the prescription. And thank you, Gary. And like I said, we realized it because, as Gary said, we don't know how much they're going to take back. And it's not 10%, it's now 18 to 21%, and you don't know which you're going to fall into. This does not even include the other expenses, that we have, such as labor, supplies, utilities, et cetera. So this move of turning away prescription totally pains me. We've never done anything like that in our 75 years. Just this week, one of Kohl's patients had a prescription for Focalin, a drug used for attention deficit disorder and hyperactivity. We told the mother we couldn't fill the prescription because the PBM pays us less than what we buy the medication for. There's a shortage of this drug if you kept up with the media, but my pharmacy is pretty good at hustling and getting the medications for our customers that we serve. So although if Kohl's is paid less than what it purchases the drug for, Kohl's can't serve anyone. The family came to Kohl's because many pharmacies could not obtain the medication and their physician recommended that they come to us. So you may ask yourself, why doesn't Kohl's negotiate its contract better with the PBM? Well, when we request any type of contract that is fair, the PBM's response is, we don't negotiate contracts. When the PBMs are ranked in the top 15 of the Fortune 100, I guess the PBM can bully pharmacies. Getting this bill passed will stop the PBMs from the pharmacy accessibility issues for Nebraska that they have created. The Department of Insurance's misinterpretation of the definition of an insurance company and the PBM Bill LB 767, which was passed unanimously last session, makes the provisions of that bill unenforceable. And that without this bill, the provision in LB 767 will not be enforced by the Department of Insurance. So Senator Von Gillern, you mentioned that the RXs, that the prescriptions that they own the pharmacy, and why don't you, I'm sorry.
No worries. Thank you, Mr. Cole.
I'll be happy to ask you to continue on that thought.
Okay. So you know when you're reimbursing, when you're signing a contract, you know what you're going to be reimbursed. Well, for one thing, we can't negotiate it, and we don't really know for sure what we're going to be reimbursed because the generic pricing changes up and down depending on because there's many manufacturers in the market. And so the generic price we buy the drug for one day could be much higher the next day or lower. But overall, it's going in the wrong direction where we have to actually send prescriptions away. And when we send them away, we send them to the vertically integrated insurance. So like Gary mentioned, with United Healthcare, we send them to Optum, and then they reimburse their own entity at a higher level. fortunately have seen some of the reimbursements, and they reimburse them at a higher level than we have. And so I hope that makes sense. They have no regulation, and so they can do those things.
So there's a
Yes,
question
you're
over here.
recognized.
That helps. So what I'm beginning to understand is you don't have the option to go, if you don't like the price from, I'll use the term vendor A, you just can't go to vendor B or vendor C. It's dictated by the patient's insurance coverage that drives where you have to buy that product from.
No, we can use multiple sources, although with your primary wholesaler, you're committed to a certain level through them,
Okay.
so that you try to do as much through them as you can. So you'll buy the drug at what you think is the lowest price, and as the pharmacist from Hastings mentioned, we're in large buying groups, so we can compete with a scalable volume. But when you're getting reimbursed less than what they would pay the pharmacy that they own, then it really doesn't matter. And so, of course, the consumer and the employers are paying more too, because they're going to the pharmacy owned by the United Healthcare's, even the Blue Cross Blue Shields, they have their own.
So I'm going to use maybe a dirty word. The only way that this works is if the big three are colluding on their pricing. Is that essentially
Well,
what you're
they
saying?
they are. And you can't negotiate with any of the big three. So you got 20% less left of them that you can negotiate with. I would say that like a pharmacy such as Walgreens and CVS, they do have a little negotiating power, because they may lose, 40% of their network or 30% of their network. So they can negotiate a higher reimbursement than everybody else.
Thank you.
Thank you, Senator Von Giller and Senator Cowles.
Thank you, Chair Slama. So you said if you, sometimes you're surprised by them charging or taking too much, and so you have to send patients away. Have you ever been surprised the other way, where they don't charge you quite as much?
You mean where they pay me more?
Right. Has it ever happened in reverse?
It happens once in a while.
Okay, not
But-
enough to balance it out?
Oh, no, I've already closed 3 of my pharmacies. And fortunately for me, I do other things besides just fill prescriptions. And, but
So it's fairly lopsided.
not fairly, but unfairly lopsided. It's huge.
Thank you, Senator Cowles. Additional committee questions? Seeing none, thank you very much, Mr. Cole.
Thank you, everybody.
Good
Chilly.
afternoon.
Good afternoon. Yeah, I've seen some of you guys before. Good afternoon, Chairperson Slama and other members of the Banking, Insurance, and Commerce Committee. My name is David Randolph, DAVIDRANDOLPH. I'm the pharmacist owner of Dave's Pharmacy in both Alliance and Hemingford, Nebraska. If you don't know where that's at, 7 hours west of here. I'm representing the Nebraska Pharmacists Association as well as rural pharmacies throughout the state. I'm here to testify in support of LB 778. My fellow colleagues have testified regarding several areas in which PBMs hurt local pharmacies, decrease access to healthcare, and hamper patient outcomes, and there'll be more to come. I want to speak to you today about the appeals process, which is allowed where a pharmacy can contest an underpayment by the PBM, that a medication has already been dispensed, then we can go ahead and contest that. The pricing is based on MAC, as you've heard, the maximum allowable cost. The issue with that MAC pricing is each one of the PBMs has a different list for that specific drug. So you really can't track down what is the true maximum allowable cost. The other thing about this pricing is it's not updated on a regular basis. For my pharmacy, we get pricing updates every day. For the insurance of the PBMs, what happens is they'll have a price in there from a month ago. So with the supply chain issues that we've seen in the last 3 years, we are underpaid for that drug because things are harder to get. The price has gone up and they're still paying off a price 3 months ago that no longer applies. Our systems update daily, theirs need to update daily too. A lot of times, like I said, it may even be on the second or third refill. They do price adjustments, but I have never seen a price adjustment in my favor. It's in theirs. When you do an appeal, you send in a copy off of a low paid claim of your invoice with the prescription, with the date it was processed. 98% or higher of all appeals I've ever done have been rejected. One PBM in particular in 9 years, I got one appeal that was approved. I turn in 5 to 10 claims a day on appeals that are underpayments by at least $10. The explanation is never given, and when I've inquired, they told me you should be able to buy it cheaper. However, they don't give a manufacturer or a source where that price is available. The NDC, or the National Drug Code, is not given for the medication, and each NDC code is specific for a certain manufactured drug, strength, and size. They don't give that. So we're left in the dark, underpaid, trying to take care of our patients on where we can find this cheap medication that's in Zimbabwe or Mexico. When all the independent pharmacies, small chains, grocery store pharmacies are gone, the PBMs will be happy. But what about the communities where they're located? The Nebraskans out of jobs, the patients without access to timely prescriptions, vaccinations, and quality care provided by more than just an 800 number. And what about the already overworked quick cares, clinics, and hospitals where these patients will be forced to turn when the vaccination, medication questions, and insurance problems that these pharmacies are serving are no longer there?
Thank you very much, Mr. Randolph. And as always, thank you very much for making the very, very long drive completely catty
At least
corner
there's good
across the
weather
state.
today, so.
Absolutely. I mean, compared to last time, for sure.
Yeah.
Questions from the committee? Senator Cowell.
Thank you, Chair Slama. 5 to 10 appeals per day. How long does it take to file each?
Well, one PBM, I can fax them, so that's faster. The other one, I have to turn them in digitally, and it takes a little longer. And legitimately, I am, at the end of the day, 20 minutes to an hour every day.
Thank you.
Thank you, Senator Cowell. Senator Jacobson.
Thank you, Chair Slama. I can identify with the geographic issue. I think many people see North Platte as being on the Wyoming side of the border,
Yep.
and you would be on the Montana
Yeah.
side of the border.
We're about halfway there when we get
So
to
you're-
you,
yeah,
yep.
You're about halfway. Well, thank you for being here. I guess, again, maybe trying to understand this. So are you part of a buying group with how do you access the
Yeah, I'm part of the
pharmacy?
buying group. In fact, the buying group is with the pharmacies in North Platte as well, the USAVE buying group.
Okay.
And so there are several thousand, I couldn't tell you exactly how many in that buying group. And even with the power of the buying group, we are still underpaid that amount by that many claims. And that's just a $10 claim. If I lose $5, yeah, I don't like losing a quarter, but it's not worth my time or my family's time for me to stay, 3 hours at the end of the night.
I'm assuming that when you say you're losing $10, it's not just on one patient, it's on anyone purchasing that.
Right, yes. And that's just, like I said, $10 is the minimum. But yeah, I've had one, like Mr. Cole said, I had one earlier this week, $150 loss.
Thank you, Senator Jacobson. Senator Ballard.
Thanks, Chair Slama. Thank you for being here. Thank you for making the drive. So previous testifiers have said they had to turn customers away. Is that similar in your case?
Well, if I don't have the drug, I can't dispense it and I won't order it in. Obviously, for like a $150 loss or even a $50 loss, I can't take that kind of loss and stay in business. So if I don't have it on my shelf and I run a claim through, because you can run a claim through to see, and it's smart to do that because you don't want to, like there are drugs literally that are thousands of dollars. I don't want to carry that on my shelf unless I know I have a patient that I'm going to dispense it to. So I may not have it. So you bring in your prescription for an expensive drug. Okay. I will run it through your insurance, see if it's actually covered, because a lot of times they don't cover expensive drugs. They require prior authorizations or, like he said, sorry, Charlie. And then at that point, I will order the drug in because we get everything next day. Okay. But yes, if I run a claim through and I see that I'm going to lose that kind of money, I'm sorry, I can't fill this drug, I'm not going to order it in. So then, yes, I will have to send you elsewhere. And out where we're at, we got 50, well, in Alliance, there is one Safeway. But in Hemingford, there's nothing. I'm it. And we're 50 miles away from the nearest chain.
Okay, so that was my next question.
Yeah.
Do they resort to mail order then?
They would go through mail order, and yes, then that's an issue. Just this year, I've had 2 patients come in with frozen insulin. And they, like, I think you said, they did not cover it. They said, too bad, so sad. And in the case of those insulins, it was $400 and $700.
Okay.
And we luckily, the prescriber had samples and we were able to get them through.
Okay, thank you for being here.
Thank you, Senator Ballard. Additional questions? Seeing none, thank you very much, Mr. Randall.
Okay, thanks.
Welcome, Mr. Otto.
Welcome. Good afternoon, Chairwoman Slama, members of the committee. I'm Rich Otto, R-I-C-H-O-T-T-O. Thanks to Senator Bostar for introducing 778. I'm testifying in support of this legislation on behalf of the Nebraska Retail Federation and the Nebraska Grocery Industry Association. Again, we're appreciative to Senator Bostar for his work and his continuous work the past 2 years. I do just want to go back a little bit to Senator Coulterman's LB 767, which we did get done last year. Thought it was a big step at the time. That step has gotten smaller and smaller as we've seen the assessment from the department. But I do want to just say the time that Senator Coulterman had to put in to get that first step made. This was a multiple year process working with all parties, those that will come in opposition, and painstakingly got something done. But I just want to emphasize to the committee how much effort had to be done by Senator Coulterman. We are appreciative of Senator Bostar for continuing that effort, but the work still needs to be done on PBM reform, and it is going to require all of the committee to be behind this to get anything accomplished. And so we just really want to reiterate how much time and effort is required to get big types of legislation like this done. The proponents have done an accurate job of outlining all of the things that are in this new legislation. All of these types of things, spread pricing, cost of acquisition, all of this has been done in other states. It's been vetted in other states. From our retail pharmacists' perspective, many of them are important, but again, it is consumer choice of being able to pick their pharmacy and the continuous effort of pushing patients away to other pharmacies, mail order to the PBM pharmacies is our number one concern, market share. And so that is a huge piece of this legislation. The others are very important, but I just wanted to reemphasize that even from the chain standpoint, that market share is essential. The other point that some brought up is time, the time of our pharmacists. And proponents have gone over how they are losing money on many of these. Well, many of the losses are not worth pursuing because of the time aspect. And we just, at the retail pharmacy level, continue to want our pharmacists to be spending more time helping patients, improving outcomes, and navigating the complex system that has been set up by the PBMs is very hindersome in doing that. Again, at some point, it is going to get so bad that consumers are going to really start to feel the pain. And in Western Nebraska, it'll be the first, and then we'll have less and less choices for our pharmacy. And eventually, I guess maybe the hospitals will be in here supporting it when they have too many people coming in to the emergency room for pharmacy-related issues. Happy to answer any questions.
Thank you, Mr. Otto. Any questions from the committee? Seeing none, thank you very much. Okay, additional proponent testimony for LD 778.
Good day.
afternoon. Go right ahead.
Madam Chairman Slama and Senators, thank you very much for letting me testify today. I'm Dr. Melvin Churchill, MELVIN, CHURCHILL. My middle name's Albert, if anyone wants to know. At any rate, it's a fairly English name, by the way. I'm here on behalf of the Nebraska Medical Association, which represents approximately 3,000 physicians across the state, and the Nebraska Rheumatology Society, representing 90% of all rheumatologists in Nebraska. I'm an active, ongoing rheumatologist. I've practiced here for quite a long time. I've helped develop these products that we're talking about today in terms of rheumatic disease and biologicals. I've had the opportunity to see the life-saving benefits of these particular products. These neurobiologics really changed the plane of battle for rheumatic disease. In the past, I would see patients deteriorate. We had old borrowed drugs that didn't work well. At this point in time, we're able to prevent joint damage, maintain quality of life, combined with increased functionality in many cases, and reduction in mortality. The PBMs, as they're called, negotiate rebates and discounts with drug manufacturers based on the list price of the drug. The higher the list price, the larger the discount and rebate can be negotiated. The PBMs are the intermediaries between insurance and drug pharmaceutical manufacturers. Unfortunately, there's no place in this equation for the patient. Cigna's Express Scripts, Aetna's CVS Caremark, United's Health Group's Optum Rx capture 80% of the PBM marketplace, as we've already heard. The PBMs determine formularies for a given insurance company, indiscriminately altering access to a particular product which the patient may have been using for quite some time. And I'll point out a specific case. The rebates and fees PBMs receive from drug manufacturers are incentives for the PBMs to place the manufactured drug on the formulary, which may not be in the patient's specific best interest. Case in point, one of our patients recently, within the last couple of weeks, was denied access to medication which she had been utilizing since 2007. She's been on this commercial agent for many years with an incredibly positive response. She's still a functioning, actively employed individual because of that. She was denied this product simply because when the insurance company decided to no longer provide this particular preferred product, this was no longer provided as a preferred product, Despite dictating appeals and personal phone-to-phone, peer-to-peer calls from my office and my staff and myself, she's been denied access to this treatment. The patient has pursued every exception. We put hours in on this one. This is not the only one. She's also contacted the Nebraska Department of Insurance to file a complaint. Though the original function of the PBMs was to bring cost of medication down, this has not been the result by any means. Despite the negotiations, the insurance companies and the PBMs have this formula: list price, discount, number of prescriptions filled in the formula, etc. I'm done. Somebody would like to ask me a question. I have a couple more things to say.
Thank you very much, Dr. Churchill. Are there questions from the committee? Senator Von Gilligan.
What else would you like to say?
Thank you.
Well, I think the reality is, this practice by PBMs has altered physicians' right to prescribe specific medications. It's interfering with the doctor-patient relationship. And unfortunately, and this is the real thing for me, when a patient's denied access to drug they've been on for no good reason other than someone decided somewhere in another office that they're not going to make that a preferred product anymore, this patient is at risk for a serious flare. Not all these drugs are equivalent. There are biosimilars, all kinds of things going on out there that they're insisting we use. But they're not exactly the same. These are very complex proteins. They're immunoglobulin-like proteins that function as a biological warfare, if you will. I call them cruise missile drugs. They interfere with specific pro-inflammatory proteins which stimulate the disease. You suddenly alter that balance that you've created with this new product. This disease may flare and life can be threatened. Rheumatoid arthritis, for example, if you alter their treatment very much, and if they're really a highly ill individual, they may have a sudden flare of pulmonary disease and pass away quickly. It's a life-threatening situation when someone tells you you can't do this anymore. And they'll say, well, these other drugs are just as good. The problem is there are very few head-to-head studies integrating all these different agents. And I probably know as much about it as anybody. I've been doing this research for 30 some years. And I know exactly what these products are like. They're not easy to use. They require specific handling, specific adjustments. And we really have to make sure the patient's taken care of. This whole process is interfering with this. Whole process is interfering with medicine and our ability to do what's right for the patient. I mean, this has been looked at the congressional level on an Oversight and Accountability Committee in Washington as we speak. This practice has become kind of incredibly complex and yet totally transparent. There's no way, as the pharmacists have said, there's no way we can know exactly what it's going to cost. We've had to stop giving several drugs in our office because the cost provided doesn't cover the cost we have to pay for the products that we give.
Thank you.
You're welcome.
Thank you, Senator Von Gilleren. Additional questions from the committee? Seeing none, thank you very much, Dr. Churchill.
It's my pleasure. Thank you very much.
Come back anytime. Good afternoon, Mr. Schaefer.
Good afternoon, Chair Slama, members of the committee. My name is Matt Schaefer, MATTSCHAEFER, appearing today in support of LB 778 on behalf of the Nebraska Hospital Association and the Pharmaceutical Research and Manufacturers of America. LB 778 will help patients better access and afford their medicines by addressing several practices of PBMs that shift costs to pharmacies, employers, and patients. As you will see from the handout that the page is distributing, in recent years, the three largest PBMs have combined with health insurers, order pharmacies, and provider groups to form large, vertically integrated organizations, giving them extraordinary bargaining leverage and control over patients' access to prescription medicines. The three largest PBMs are responsible for pharmacy claims of about 80% of medicines dispensed in the United States, and they use this leverage to maximize their profits, often in ways that harm patients and others. Measures in this bill that reform PBM compensation, like implementing a duty of care and banning spread pricing, can assist in removing these misaligned incentives that pad PBM bottom line at the expense of employers and patients. By explicitly imposing a duty of care on PBMs, this bill would ensure that PBMs act transparently and place their duties to patients and their clients before their own financial interests. LB 778 would also prohibit spread pricing, which enables PBMs to profit from the difference between the amount they reimburse pharmacies and the amount they charge their plan sponsors and insureds for medicine. Ohio investigated spread pricing in its Medicaid program recently and found that PBMs used that practice to make over $200 million a year from taxpayers in that state. It inflates drug spending at the expense of the state, employers, and patients. And as a result, 21 states have banned this practice in the commercial market. I would urge the committee to advance LB 778. Thank you.
Thank you, Mr. Schaefer. Are there any questions from the committee? Seeing none, thank you very much. Great. Additional proponent testimony for LB 778. Last call. Proponent? Okay. Seeing none, we will now move in to opponent testimony for LB 778. And please, if you're testifying on LB 778 in any capacity yet today, please move up to the front few rows.
Good afternoon.
Good afternoon.
Chair Slama and members of the committee. My name is Bill Head, Billhead. And apologies to the clerk. I think I actually wrote William on the paper. Thank you for the opportunity to testify today on LB 778. We are in opposition. I represent PCMA. We are the National Pharmacy Benefit Manager Trade Association, and we are in opposition to the bill. Before I get into specifics on the bill, I do want to address a couple of statements that were mentioned earlier. First, on DIR, the direct indirect remuneration, easier said than done, but happy to get into specifics, but that's actually a federal Medicare requirement. The PBM does collect the fees, but they're not our fees, and they can be high. Happy to get into the program itself, but those are not PBM specific fees. The other thing, and I mentioned this because it was brought up a couple times, that PBMs are top 15 Fortune companies. That is not true. And I would urge you to check your phones and look at the top 20. Interestingly enough, 2 of the top 10 are in fact drug wholesalers, McKesson and, which I think is number 1 actually on the Fortune. And AmerisourceBergen, I believe, is at 10. CVS Health is, I think, in 8 or 9, but CVS Health is not a PBM. The top 3 PBMs are Express Scripts, Optum, and CVS Caremark, none of which are in the top 15. And I mentioned this because there's a lot been made about the top 3 PBMs having 80% of the market. The top 3 drug wholesalers have 95% of the market. So the pharmacies really are at their mercy much more than they are at the mercy of PBMs. With respect to the bill itself, going back to 767 and the comments we've made, which were accurate, there were numerous stakeholder meetings, both telephonically and in person. Senator Williams and Coulterman did yeoman's work getting that done. I thought at the time it was like sincere, good faith negotiation, but I find ourselves back again addressing many of the issues that were taken off the table or dealt with. So I at this point question the sincerity of those negotiations. And by way of example, accreditation for specialty pharmacy was one issue. We had asked for at least 2 national independent accrediting organizations to accredit specialty pharmacies. The other side asked for 1. Eventually, that's where it came down to 1 accreditation. Now they're saying no accreditation. And these are organizations that accredit hospitals, the Joint Commission, URAC, and so forth. These are completely independent organizations. And these aren't about finance or money. These are about patient safety. We would not go to a orthopedic surgeon who wasn't board certified. But certainly there's no state law that requires an orthopedic surgeon to be board certified. So from us, this is really a clinical safety issue. And then the other issue I'll raise with respect to the bill, and this goes to your point, Senator Van Gerlen, is on the reimbursement and the contracting. I understand their concern about the MAC list and how that comes out and their ability to purchase. Can I finish my sentence? I apologize.
Yes, you may, Mr. Head.
And I understand that concern, but their solution is just to make sure that we make a profit on every drug we dispense. And I think that would be unheard of for the legislature to enact a law that guarantees a profit on every single item a business sells in their store. Not to say that there aren't legitimate issues, and I do take issue with the fact that we want to see independent pharmacists go away. Far from it. We need them in our networks. So with that, I will conclude and happy to answer any questions.
Thank you, Mr. Head. Are there any questions from the committee? Senator Dungan.
Thank you, Chair Slama, and thank you for being here, sir. You've been helpful in prior discussions with me understanding the entire process and procedure. And in fairness, I was not here during those earlier negotiations that happened, so I'm kind of new to this conversation. I understand that maybe from a 30,000 foot view, it feels sort of like there's an argument here of are PBMs good or bad, right? And I understand that maybe that's part of the discussion that we're getting into. But when I look at the bill that we're talking about here, 778, and we're looking at some of the actual provisions that it's attempting to implement, many of these strike me as things that are, for lack of a better word, sort of just basic consumer protections, right? Prohibiting the PBM from reimbursing a pharmacy or pharmacist an amount less than the amount that the PBM reimburses a plan affiliate. Creating, for example, also a duty of care, essentially, a good faith and fair dealing with respect to the performance of PBMs. Beyond just an argument of are PBMs good or bad, what specific provisions in the bill do you see that are going to harm PBM's ability to actually do their job? Because it seems like to me these are simply basic protections being laid out to prohibit some of the actions we've heard from the proponents earlier today.
Sure, no, and fair question. So keep in mind, we're an extension of the health plan, right? We're contracted by the health plan to administer their drug benefit. So everything we do is under very strict and limited contract provision. So if there is, it's called steering, right? Make them go to the mail order or make them go to CVS or something like that. That's in the contract. And it's in the contract because the payer, the health plan, has determined it will save them money, right? So if a person has a mail provision that requires them to get, and these are for maintenance drugs, and requires them to get their prescription via mail, the mail facility is shipping nationally. right? So they can buy in a volume that a single pharmacy or a set of pharmacies can't buy at. And that savings is passed on to the payer and to the patient. So when you say, consumer protection, we say actually these provisions are causing consumer harm by increasing their prices. Yes, it would be great that a person can choose to go to any pharmacy they want, whether it's in network or not, but there's going to be a price to that. And at a time when we're always talking about higher drug costs and expanding access, this bill is moving in the opposite direction. We're going to add to the cost, right? And, I should have prefaced my comment, every single state employee program in this country hires a PBM. Virtually every single, including Nebraska, and virtually every state Medicaid program hires a PBM. So either we're pulling the wool over 50 states' eyes, or we're actually bringing value to the table. I get that the pharmacists have reimbursement issues. Let's have a discussion about that. But let's not guise it in sort of these provisions that actually do more harm than good.
But you would be willing to continue conversations regarding the reimbursement issues?
Absolutely, particularly for the rural pharmacies. And so in Illinois, for example, they actually set up a general fund, which everybody contributes to help particularly, well-defined rural pharmacies. And I recognize, having, family here, I recognize that Nebraska, the pharmacy in some areas is much more than the pharmacy, right? It is a cornerstone of the community. We don't want them to go away. It doesn't serve us any good for those pharmacies to cease to exist. If for no other than than self-interest, right? The PBMs are competing against each other. And one of the ways they compete is on network adequacy, right? If I have a broader network, if I have a more robust pharmacy network, I'm going to be more attractive to the health plan.
And then the last thing I'll ask, and then I'll move on to the next. We can move on to the next. I don't want to take too much time, but the part that does speak to me loudly, I suppose, is this duty of care and the requirement for good faith and fair dealing. I mean, do the PBMs have an issue with that?
Well, we do with the respect to, because we have a contractual obligation to the plan, right? So if you then create a statutory obligation we have to the prescriber and to the patient, then that is creating a potential conflict of interest, if you will. The health plan has a fiduciary responsibility to their beneficiary, right? So if we act against that, the plan is on the hook, right? If somehow contractually the plan has done something that disrupts their fiduciary obligation to the beneficiary or patient, they're on the hook. And health plans as entities are sued in class actions all the time for doing just that they've mismanaged their beneficiary requirements under fiduciary. And certainly I think the plans can testify in more detail about that. But our concern is the conflict that it might create. Because again, we're really just an extension of the plan, acting as the plan, if you will.
Thank you. I appreciate those clarifications.
Thank you, Senator Dungan. Senator Ballard.
Thank you, Chair Slama. Thank you for being here. Can you give me just a brief history of PBMs? And then I'm reading this letter from the House Oversight Committee, and it seems like they're blaming a lot of rising healthcare costs on PBMs.
Yeah.
So can you just I'll give you a minute for a marketing pitch. Are PBMs necessary?
I think the fact that, we're administering the drug benefit for 275 million Americans. And I think our position generally is, if we don't do it, somebody's going to have to do it. We're filling a need. Right? It's not like we're interjecting ourselves. I know we're often called the middlemen, but we were invited in. We didn't force our way into this. Now, I think it was described earlier and accurately by, I think, one of the pharmacists. Back in the 70s, PBMs were just claims processors, right? Somebody would collect, get their receipts from their drugs and put them in a shoebox and mail them in and get a check, right? And it was that. But as we know, prescription drugs continue to I guess multiply, if you will, in terms of the diseases that they treat, and good thing for all of us, right? But they've increased in cost exponentially, right? And that's really what I think the biggest problem we face is the high cost of prescription drugs. And so the payers started to look to PBMs more and more as, how can you help us manage this cost? What can we do to manage this cost? And so that's why you have things like mail order. That's why you have things like step therapy and prior auth. And for the vast majority of people, the system works, right? But because of the higher cost of drugs, because of the tightening of payers' belts, if you will, I don't think there's any doubt that some pharmacists have been challenged. But to suggest that we're the cause of that, that somehow we've created this inflation of drug pricing is absurd. We have a role to play, and I think we do it very well. I think if you look at the sheet that I shared on the Nebraska fact sheet, the amount of money we save the state is in the billions, right, over a 10-year period. On average, we're saving people $1,000 a year if they have a PBM versus somebody who doesn't. So I think the short answer is, if we don't do it, the need to manage the drug benefit doesn't go away, right? You could hire a bunch of people internally, but you still have to manage that benefit because it's a significant amount of what you're paying.
Thank you.
Thank you, Senator Ballard. Senator Kauth.
So I'm trying to take him through challenges.
Oh, yes,
I'm
good.
not
No,
doing a great
please,
job on
please,
it.
please.
So, okay, just a couple questions. Who owns, like, if you look at Caremark, who is the eventual owner of that? Is that group in the top 15?
Yes, so CVS Health,
Okay,
which is
so
the parent
CVS
company, I think, I want to say it's eight or nine, but they are not, CVS Health is not a PBM. But they have a
But they
PBM
own
in
a
it with,
PBM.
yes, correct.
So is that happening with, I mean, this little sheet that we got from Mr. Schaefer shows a lot of the big insurers. It looks like they all have PBMs, which, I mean, makes sense, but is that where some of the consolidation is happening, and how is that affecting?
Yeah, we think and I'll let the plans speak more to this, but we think the integration is better for the patient, right? Because again, whether you're a health plan or you're a PBM, the healthier you keep a patient, right? You're keeping them out of the ER, you're keeping them out of the hospital, you're keeping them on drugs. Patient adherence is a big PBM, objective, keeping people on their medication. Everybody stops their antibiotics, a week early. The more we can do that and coordinate with the plans, the more we're saving and keeping the patient healthier.
So the coordination is what keeps people healthier?
Absolutely, right? If there's, if somebody is in a position, because let's face it, if you're undergoing a medical treatment on the medical side, particularly surgery, the odds are you're going to leave the hospital with medication, right? So being able to marry those two and coordinate those two activities, and again, keep the patient as healthy as possible, I think makes a lot of sense. I don't know, you don't have it here obviously, but Kaiser Permanente in California example is the ultimate sort of all-inclusive, integration, if you will.
Thank you.
Thank you, Senator Kauth. Additional committee questions? Senator Von Gillern.
Thank you. Quick question. Do the PBMs play well with Medicare, Medicaid? Are there claims back and forth? Because that's like a whole different, we've talked a lot about the private buyers
Right.
and the local pharmacies and so on.
So we have very strict rules under Medicare, the formulary, the pricing, everything is actually done more than a year and a half advance of getting everything approved by CMS. So it's a very highly regulated area, Medicare in particular. So I don't know if there's back and forth, but we're contracted by plans who then offer, the Part D benefits, the drug benefits for Medicare beneficiaries, and the PBM is implementing that drug benefit as well. But it's under very strict, if you will, or very controlled federal regulations.
So it sounds like that's a different pricing environment than what our local consumers and local retailers are under. Is that true?
No, it is. And as I mentioned earlier, the DIR thing, fees, for example, are in fact a Medicare program, not a PBM program.
Okay.
Great.
All right. Thank you.
Thank you, Senator Von Gillern. Additional questions from the committee? Seeing
Can I
none.
just thank Senator Bostar, though, because he's kept a very open door and been open to my complaints. So.
I appreciate that very much. The legislature prides itself on having open doors for complaints. Good afternoon.
Good afternoon, Chairman Slama, members of the committee. My name is Alex Sommer. That's ALEX, Sommer, SOMMER for the record. I represent Prime Therapeutics, a pharmacy benefit manager owned and operated by 19 not-for-profit Blue Cross and Blue Shield plans across the country, including Blue Cross and Blue Shield of Nebraska. First, I also want to echo what Mr. Head said and thank Senator Bostar for having an open door and having some conversations with us, being willing to discuss this bill both last year and this year. We always appreciate that because sometimes that door is more closed than open. So I want to start off by noting something that Senator Bostar said in the open, and that was noting LB 767. And going back to some of the proponents talking about this notion of PBMs being unregulated. That, coupled with the fact what Senator Bostar mentioned about LB 767, is patently false. PBMs are heavily regulated across the nation, but then specifically in Nebraska via the regulatory scheme that was passed by this committee and this legislature just last year. The proponents, though, I think will call us unregulated until they get the one thing they've been after throughout these past few years of negotiations. And that straight plainly is more money. End of the day, that's what this is about. And we are in the business of making healthcare dollars go as far as possible. Paying more money for the same thing that we already get today, which is prescription drugs, for the members that we serve, is simply not a way to stretch those healthcare dollars and get Nebraskans the prescription drugs that they need to live better and feel well each day. The main thing that we are trying to do with those healthcare dollars is get the right treatment to patients at the right time for the best possible price. Doing this, paying pharmacies more money again for that drug, is not a way to go about doing that. That's a way to make those healthcare dollars go. They should go not go as far, provide less care, and make those patients less healthy. And as Mr. Head said, that having an unhealthy patient not getting the care they need ends up being a more expensive patient. And that ultimately is in nobody's best interest. Patients aren't as healthy. Health plans are paying more money. Consumers are paying more money in the way of more expensive treatments that they didn't need. And health plans are paying more money by way of, those increased premium, or those increased costs that then feed into higher premiums over the course of the next year. Now, getting back to the bill that was already passed last year, one of the things that was said by the proponents was around maximum allowable cost, and that these are not updated even on a monthly basis, whereas their prices are updated on a daily basis. The law that you passed last year requires that those prices be updated every 7 days. So those prices are updated at a minimum every 7 days. Additionally, it's stated by the proponents that those prices are when we reject an appeal, that we do not provide an alternative NDC showing where they could actually get that drug. Again, the law that was passed last year requires an alternative NDC be provided. So the answer is not additional laws. It's an enforcement problem if you have an issue with the law, because the law is already on the books requiring those very things that was stated by the proponents. One more thing to note, there was a lot of talk about rebate dollars. We at Prime pass through all 100% of our rebate dollars to our plan sponsors, so those dollars can offset the cost of healthcare in the state of Nebraska. Again, that's a way of making sure that healthcare dollars can overall go as far as possible, and not just, it's not, these rebate dollars aren't allocating to us as a way of just kind of, as a profit-making scheme. They're a way to drive down the overall cost of care. So I see the red light's on. I will wrap up and say, for these reasons and a myriad other reasons, we oppose this bill, and I'm happy to answer any questions.
Are there any questions for Mr. Slama, the committee? So are you a publicly traded company?
We are not. Privately held by those 19 not-for-profit Blue Cross and Blue Shield plans.
Gotcha. All right. Thank you. Thank you for your testimony.
Yeah, you guys are making it too easy on me, I guess. No question. Thanks, guys.
Further opponents?
Good afternoon, Vice Chair Jacobson, members of the Banking, Commerce, and Insurance Committee. My name is Jeremiah Blakey, spelled Jeremiah, B as in boy, Lake. I'm the Government Affairs Associate and Registered Lobbyist for Blue Cross and Blue Shield of Nebraska, testifying in opposition to LB 778. PBMs provide a valuable service to Blue Cross members by administering the plan's prescription drug benefit with the goal of providing our customers coverage for medications they need at an affordable cost. Working with our partners in the PBM industry, health plans have been absorbing a larger share of the cost of prescription drugs over time, largely shielding patients from price increases from drug manufacturers. A recent study of prescription drug claims from 2014 to 2019 found that while the cost of prescription drug benefits increased by 14% for employer-sponsored health insurance, the patient's cost sharing declined by 5%. This shows that PBMs have successfully bent the cost curve despite the upward pressure on prescription drug prices and increased drug utilization. PBMs accomplish these savings by encouraging the use of generic drugs, increasing medication adherence, and obtaining price concessions from drug manufacturers. Despite the best efforts from PBMs, prescription drug costs continue to rise due to the price increases from drug manufacturers. Last year, the price of new drugs for chronic conditions approved by the US FDA reached a new record high with a median price of about $257,000. More recently, 3 gene and cell therapies approved by the FDA have a list price between $2.5 and $3 million each. There's no question that these new drugs have the potential to treat complex conditions and offer a better life for patients, but they also add significant costs to the healthcare system that is already the most expensive in the world. Unfortunately, this bill does nothing to address the skyrocketing costs for prescription drugs. Instead, this bill is more likely to increase healthcare costs for Nebraska businesses and families by guaranteeing a pharmacist make a profit on every prescription they fill and adding significant new compliance burdens to PBMs. As you know, PBMs, as we've discussed, PBMs are already regulated by the state. Instead of discussing new mandates on PBMs only months after the current state law took effect, we would welcome the opportunity to work with this committee to conduct a review of the prescription drug supply chain, including PSAOs, which were discussed earlier, and drug manufacturers. However, we cannot support additional regulatory burdens that will only increase costs for our members. For that reason, we are opposed to LB 778. Thank you for your attention. I'm happy to answer any questions you have.
Thank you, Mr. Blakey. Questions from the committee? If not, I've got one question.
Yes.
I guess obviously we've heard a lot of testimony here today, and there's a lot of strong feelings on these issues. So are you folks open to potentially an interim study to really research this issue more in depth this summer, or what's your view there?
Sure. Again, pharmacists play a really important role in the healthcare delivery system for our members. So we want to see them succeed. There's no question about that. So any way that we can sit down and have an honest conversation about what their frustrations are and how we can address those in a way that is cooperative and collaborative, we're happy to have that conversation.
Thank you. As you've noticed, the session's kind of not moving along overly rapidly at this point, so we're probably going to have some time this summer to talk. So thank you.
I look forward to it. Thank you.
Thank you very much. Thank you. Other opponents?
Good afternoon, Vice Chairman Jacobson and members of the Banking, Commerce, and Insurance Committee. My name is Robert M. Bell. Last name is spelled B-E-L-L. I'm the Executive Director and Registered Lobbyist for the Nebraska Insurance Federation, the State Trade Association of Nebraska Insurers, including most of the health plans in Nebraska. I am here today to testify in opposition to LB 778. I would point out, I did check out the Fortune 10 list, and there are 3 Federation members on that list. So I take that as a sign of pride, particularly Berkshire Hathaway, which is a Nebraska domestic company. This isn't step 1 or step 2 of the PBM debate. I mean, we've been having this debate in Nebraska for quite some time. In 2019, Senator Coulterman first introduced PBM regulation in Nebraska, and there were some negotiations related to some things that the health plans and pharmacists and PBMs and all could kind of agree that maybe there were some things that needed to change. And as well, the federal government had been acting at the same time. And so we all took steps to make sure, gag clauses were taken out of contracts, and that we allowed the ability of pharmacists to share various cost information with consumers, which had also been prohibited in some of these contracts. In 2021, there was a hearing that admittedly didn't go very well for insurance companies and our business partners in the PBM industry. And this committee prioritized a bill that ended up not moving, but we did enter into those negotiations. At that time, it had numerous conversations, including, I think, a few of those involved Senator Bostar. And we came together last year on LB 767, which again was a second session bill, and we're talking about LB 778. So you do have quite the workload in front of you for this session, given those numbers. But that bill just became operative January 1st. I think Mr. Cole said that law is unenforceable. That is not true. That law is enforceable. I think what they're concerned about is the scope of enforceability. And there's some uncertainty related to that because of interpretation by the Department of Insurance. And had this legislation dealt solely with that particular issue, I think you would have heard different opposition or more, let's work on this kind of opposition from PBMs and from health plans in general. We're certainly open to discuss any kind of issue that's occurring in the marketplace. Pharmacists provide important services to health plan members. They're needed in our networks. And if there are business practices that are going on that are need to be addressed, let's address them. But first, let's let LB 767 actually become effective and be operative and see how that works. Thank you for the opportunity to testify.
Thank you, Mr. Bell. Questions for Mr. Bell from the committee? I guess I just have one. I hear what you're saying. I know there's a lot of frustration, and I've gotten it from pharmacies in my district that are concerned, really about that enforcement mechanism. And I don't disagree that let's don't make new laws without enforcing the ones that we have.
Sure.
I think there are challenges on the enforcement side, and I don't know whether that's Department of Insurance. Is that the first line of defense? Where is the enforcement mechanisms today?
Well, for the provisions of LB 767, yeah, it is a Department of Insurance. Now, the question I think that it was kind of hanging initially is, does this apply to employer-sponsored plans or to ERISA plans or NCOs and those types of questions? And, they looked at the statute and they looked at the plain language of the statute and decided it did not. It's my understanding. I was not involved in those discussions, just from what I've picked up in the lobby, right? And from listening to the testimony. But if it's a fully insured, it's a plan you buy off the exchange or a small group plan or some of those other types of plans, I believe that there is the ability to call the Department of Insurance and talk about it. One of the things, we heard about denials of health claims, right? From, I believe it was Dr. Churchill talking about that. And, that always makes the hair on my neck stand up just a little bit to hear that, an insurance company isn't providing life-saving care to an individual or an insured, right? That would, if I was sitting in your seats, that's what I would be concerned about. But I do want you to know there are a myriad of laws on the books already related to adverse determinations by insurance companies and the ability to appeal those to either the Department of Insurance, if it's a state regulated plan, or the Department of Labor, if that is a federally regulated plan, like an ERISA plan. And at the end of the day, if it's an emergency, those happen very quickly. And at the end, it's not the Department of Insurance that makes that decision. It's an independent review organization that's not employed by health insurance or the department or the provider, right? These are independent folks that make those determinations. So, that allows me to sleep at night, that at least other organizations are looking at these determinations that are sometimes adverse to consumers. So that wasn't your question.
But I appreciate the response. I truly do, because I do think that there are issues out there. And,
of course,
again, sometimes, we can look at new rules, but if we're not going to enforce what's out there, why bother? And so it really kind of comes down to, is this a role of the Department of Insurance? Does there need to be an independent third party? How can we get some kind of resolution on some of these practices that are being alleged to really get to, is there really fire there? Is this just smoke? And so I think that's one of the things I'd like to find out. And I guess I would ask you the same thing I asked Mr. Blakey, which I assume you're going to tell me yes, that you'd be open to.
Always.
I
would be disappointed if we did not. 79 days. That's how long LB 767 has been in effect, right? So it's been in effect for such a short amount of time. I couldn't look up and see how many have been licensed already, PBMs, under the LB 767 law. Now, they were all licensed under third-party administrator laws already. But, give it a little bit of time. We will know more this summer, right? So, and it would allow us to better address the issues.
And that's kind of where I'm at. I would just tell you, we're in the 90-day session now. It feels like we've already been through 180 of them, but I'm told it's not.
Well, you've been here 79 days, but just
All right.
It's been a long session already.
Thank you.
You're welcome.
And as I don't know whether if the Department of Insurance is going to be here, I'll wait to see if they're going to be in the neutral capacity or whether they're testifying. I got a couple of questions for them. So thank you. I think you answered my questions, and I'd ask for any other opponents. No one else in opposition? Is there anyone speaking in the neutral capacity? How are you?
Just fine. How are you?
Great.
Good.
Welcome.
Thank you. Good afternoon, Vice Chair Jacobson and members of the Banking, Commerce, and Insurance Committee. My name is Carissa Schweitzer-Masick, CARISSA, and I am a pharmacist and also the Deputy Director of Population Health for the Division of Medicaid and Long-Term Care with the Department of Health and Human Services. I'm here to testify in a neutral capacity for LB 778, which creates new requirements for pharmacy benefit managers and their pharmacy networks. LB 778 makes a variety of changes related to how PBMs conduct business, and this testimony will highlight just a few. The largest fiscal impact of this bill on the Medicaid program is the requirement that PBMs reimburse pharmacies at a price that is above the cost of acquisition of a medication or device. Federal law provides Medicaid with the use of multiple methodologies to determine reimbursements to pharmacies for medications dispensed to recipients. For Nebraska Medicaid, for fee-for-service, we use National Drug Acquisition Cost pricing. And if that's unavailable, then we will use maximum allowable cost along with any other methodologies as necessary. Reimbursement methodologies are designed to encourage pricing negotiations between the pharmaceutical product wholesalers and the pharmaceutical companies, and then to pass those savings along to the purchasing pharmacy. This bill would require Medicaid to pay claims at the pharmacy's actual acquisition cost if that cost was above MAC pricing. For some medications, as I mentioned, NADAC is used to determine that reimbursement, and it's unclear if Medicaid would be required to follow MAC pricing instead of NADAC. Our best estimate is that the fiscal impact would be $5 million per year in total funds for payments that are in excess of the MAC pricing. This bill also requires the adjustment be applied to a similarly situated pharmacy, which is not defined and may lead to higher payments in instances where a pharmacy's wholesaler previously negotiated a lower actual acquisition cost. The requirement to reimburse above the pharmacy's actual acquisition cost based on an invoice submitted by the purchasing pharmacy is operationally complex. Pharmacies will often receive discounts or rebates later in subsequent months based upon previously dispensed volumes. These discounts or rebates would not be reflected in the invoice that was submitted requesting reimbursements above the MAC, and it may result in unwarranted reimbursements. Thank you for the opportunity to testify today, and I'd be happy to answer any questions.
Thank you for your testimony. Any questions from the committee? I guess I just have one. I appreciate your testimony today, and I understand some of the issues that you're raising. I would tell you that I am concerned, and I'm kind of curious with the department, how you deal with these rural areas. Probably one of my biggest concerns, and I would ask you, as you particularly look at more elderly people, if they're going to end up relying upon mail order, they no longer have that personal pharmacist there to really direct them and help them with their prescriptions and that kind of thing. Does that concern you at all, or what's your answer to that?
Medicaid is a program. We have the option of mail order. We do not require mail order for any medication.
I'm not saying it's a requirement. I think that's what it's going to go to if these smaller pharmacies in rural Nebraska, who are likely going to have struggle because of transportation costs and so on, their cost of that medication is probably going to be above what they can sell, what they have to sell it for. They then in turn don't offer that drug. That person then in turn has to go to mail order in all likelihood because of the distance between these towns where they're located. So what's the answer to that?
Yeah, because Medicaid does have members in both rural and frontier areas, it is a concern to us. As a couple individuals mentioned, the best thing to do is to try to keep the individuals healthy. The best way to do that is to make sure that they have access to those medications. The concern for the department is the language on reimbursing above MAC does not address what I think the bill mainly is trying to get at, which is PBM transparency.
So, and that's, again, I think that gets back to the interim study, but that's one of my concerns as well, is that we probably need to come to some kind of a common denominator of definitions, what makes sense. I understand both sides of this equation. But clearly, we've heard that there's some problems with the way it's working today. And I'm going to take Mr. Bell on his word that it's new and we'll get there. But, you know, I like to trust but verify. So thank you.
Yes, thank you.
All right. Thank you for your testimony. Others speaking in the neutral capacity? Okay, seeing none, there were, for the record, 2 proponent letters and 2 opponent letters. And with that, Senator Bostar, you're welcome to close. Thank you for your patience too.
Oh, well, thank all of you. You know, it was mentioned that this isn't step one and that we've, you know, been on a journey here. And that's true. And then I realized that everyone sitting at this table, this is sort of your step one in this process. Since so much of the Banking, Commerce, and Insurance Committee was termed out or otherwise unable to, unfortunately, return to the legislature this year. So to provide some context to that, whatever step number this is, 2 steps before it, it was mentioned by Mr. Bell. 2 years ago, there was a hearing where things were so acrimonious that it's the only time that I've seen in the 3 years of legislative hearings that I've been doing this, where a state senator threatened to subpoena insurance company executives to drag them before this very committee to hold them accountable. And that was then Senator, now Congressman Flood, who did that on this very issue. And so I would just like to say that I think we've made a lot of progress. This hearing, I thought, went really well. It was also mentioned that, you know, the enactment of the legislation that was passed last year is really only just started to take effect, 70-something days. And so we should wait and see, you know, if the problems that we're perceiving are genuine or, I suppose, phantom. And so I certainly was in the legislature in 2008, but it reminds me when I hear things like that about the 2008 Nebraska Legislature. And they passed a law during their regular session that was a safe haven law to protect children. And the way it worked was you could, it was well-meaning. You could drop off your children essentially at a hospital, I believe. No questions asked, and you wouldn't be held responsible for any child abandonment, charges or liability. This was to ensure that children were, instead of being neglected or abused, they could be surrendered and hopefully put into a better situation. Well, the intent of that legislation wasn't necessarily what happened, because I think over 100 children were surrendered. None of them were infants, as I think everyone was imagining would be the case. But the law was written in a way where up to the age of 18, you could bring your child to a hospital and sort of absolve yourself of any parental responsibility and leave your teenager at the door, then becoming the responsibility of the state. And folks were coming in from around the country to Nebraska to drop off their kids. It didn't take long to figure out that that bill was broken. We didn't have to wait. A special session was called to immediately fix it. So the idea that sometimes you got to just give it more time, I don't think is a good argument. I don't think it's a strong argument. Sometimes we pass things. When it hits the real world, we know. Is it working the way it's supposed to, or is it not? This is not. And so we can fix it. We don't have to wait to fix it. We can fix it. A few other notes. I think I wanted to take a macro view of this a little bit. We talked about a lot of details. There's a lot in this legislation, a lot of back and forth. But, a gentleman who testified, who was a retired pharmacist, he talked about capitalism, which I thought was interesting. And, capitalism relies on a free market. And a truly free market relies on perfect information for all participants. We don't have that here. The participants in this market do not have, forget perfect information. They barely have any information. So what we're trying to do is ensure that we have a playing field that is level and accessible to all participants. Because as I'm sure everyone here would agree, we believe in the principles of capitalism. And right now we don't have that. So we should fix it. A few more notes. We heard from some of the proponents, that pharmacies are going out of business. They're being asked to pay more for something than effectively what they can sell it for. And then we heard from opponents that this is just all about money. Well, to some extent, yes, absolutely. This is about money. The pharmacies are going out of business. They're closing down. We can see that happening. When was the last time you heard of a PBM going out of business? Not making enough money to keep their lights on. Has that ever happened? I don't think so. Certainly not with the modern PBMs that we deal with today. I think they're doing quite well. I think their parent companies are doing quite well. So sure, the PBM itself may or may not be on a fortune list, but their owners are. We know that. Some of the biggest companies in the country. Rural access. This was brought up. I think this is really important for a state like Nebraska to consider. If you're sent away because the pharmacy just absolutely can't eat the cost of providing you with medication. So you're turned away because they just can't do it. Where do you go? In some of the places in our state, what options do you have? And then we heard about mail order. What happens then if there are no options? You go to mail order. You end up with frozen insulin. You're supposed to just die? Is that the option? Maybe that would be more convenient for some. But I think we can do better than that, and we should. Mr. Sommer talked about making healthcare dollars go as far as possible. That effectively defined the mission of the PBM. And that's interesting. So I think we need to talk about making those healthcare dollars go where? Far, sure, but where? Someone's making the money. I'm not sure it's the pharmacies that are closing down. It's also brought up the lack of enforcement was the problem. That the law doesn't need to be changed, it just needs to be enforced. But, as we talked about, one in the opening and two throughout the hearing, to some extent, the narrow scope that the Department of Insurance has placed upon the regulations that we passed and have recently been enacted is part of the problem here. So it's the fact that enforcement cannot happen for much of the healthcare space that we are responsible for here in this committee. So we'll continue to work on this. One last part. Mr. Bell brought up that if you have an adverse determination, right, for any sort of insurance coverage, and they come in and they deny something, and it's critical for your health and well-being and your life, you can appeal. And they talk about the appeals are quick. So let's think about the system we've built, where you need something to live. The person who has it tells you, no, you can't have it. You're then in this particular position, where who knows what sort of medical state you're in. You're then invited to go through a bureaucratic process, fill out paperwork, to appeal it, to then hope that someone else will give you what you need to save your life. Again, I think we can do better. With that, I thank you all. I appreciate you all joining this journey that has been years in the making. And I'd be happy to answer any final questions.
Questions from the committee? Thank you, Senator Bostar.
Thank you
for your closing and bringing the bill. And that will conclude our hearing on LB 778. And believe it or not, we're going to open the hearing on LB 448 and turn it back to you, Senator Bostar.
All right. 8th bill in this committee this session. And last.
But nobody's been counting.
I certainly have.
You've been told not to applaud.
Please continue.
Good afternoon, or yeah, we'll go with it. Good afternoon. Senator Jacobson, fellow members of the Banking, Commerce, Insurance Committee. For the record, my name is Elliot Bostar. That's ELIOTBOSTAR. I represent Legislative District 29. I'm here today to present Legislative Bill 448, a bill to prohibit certain provisions in a health plan related to the administration of medication by a clinician, a practice also known as white bagging. I introduced LB 448 on behalf of the Nebraska Hospital Association, as well as the countless healthcare professionals that are concerned about this practice. Health insurance companies have adopted policies that limit patient choice and reduce the timely access to care for critical specialty medications administered at Nebraska hospitals. This insurance practice, called white bagging, don't ask me why, requires that certain medications be dispensed by a separate pharmacy outside of the hospital, often owned by the insurance company. Patients do not get to choose if their medications are subject to white bagging, as this practice is wholly determined by a health insurance company. During this process, medications may be required to be dispensed by a distant pharmacy at a remote location from the hospital on a patient-by-patient basis. While some insurance cost-saving schemes can benefit consumers, the real-world impacts of white bagging can negatively impact hospitals, providers, and patients. White bagging has caused delays in patients getting their medications and has even resulted in hospitals being sent the wrong dose or the wrong medication. In some instances, hospitals don't receive the shipment on time, if ever, and are forced to cancel and reschedule patient procedures until the next dose arrives. This leaves many hospitals in Nebraska at risk of liability and costs associated with this process. White bagging can cause serious, potentially harmful disruptions to patient care. This disruption to care results in insurance companies making decisions that belong to doctors and their patients. Lawmakers in 11 states across the country have introduced bills that address white bagging. 3 states, Louisiana, Arkansas, and Virginia, passed legislation to end the practice. Nebraska should follow suit. I introduced this legislation last year, and our committee advanced the bill to general file, signaling our intent to monitor the practice to ensure it is not misused. However, patients are still experiencing delays to this insurance practice. Last year, in provided testimony, insurance companies stated that they were not aware of any adverse impacts relating to this practice. This can no longer be true. We all want to find ways to lower the cost of health care, but none of us should do so at the risk of harm to a patient. With that, I thank you for your time. I ask you to support LB 488. Happy to answer any questions.
Questions for Senator Bostar? Okay, seeing none, thank you, and we'll ask for proponents.
Thank you.
Thank you, Vice Chairman Jacobson. My name is Olivia Little, Olivia-Little. I appreciate the opportunity to testify before you today. I am here on behalf of Johnson County Hospital and the Nebraska Rural Health Association. I am here in support of LB 448, which would limit the practice known as white bagging. Johnson County Hospital is an 18-bed critical access hospital, along with a rural health clinic located in Tecumseh, Nebraska, which has a community population of 1,700 and a county population of 5,000. Our access area also extends into Gage County, as we have a rural health clinic in Adams, Nebraska. When we first encountered the process of white bagging from an insurance company, we weren't really even sure what it was or if we could even say, no, we will not do it. It seemed very unfair that we would have to do all the work, pay for every thing included in the service for the patient, besides the cost of the drug, and basically all we could charge for was a room charge and if any supplies were used. We would have to call the insurance company or the distributor to ship the drug, schedule the patient when the drug arrived, store the drug, take and monitor temperatures on the equipment the drug was stored in, admit the patient, pay professionals to enter and verify orders into our electronic health record. If needed, prepare the drug, administer the drug, feed the patient if they came at lunchtime, monitor the patient, which could be several hours depending on the drug, chart all the information in electronic health record, pay for all the software, equipment and personnel, meet all regulatory and documentation requirements, and we wouldn't even be able to charge for the medication. It didn't seem fair or even right. We also had safety concerns since this process would deviate from our current drug procurement and administration process. We worried about the drug arriving on time so the patient's treatment wasn't delayed, what we would do if the drug arrived damaged, or if we had an issue when preparing the medication, as we would only be receiving one dose, compliance with the Drug Supply Chain Security Act, how we would be notified by the distributor in the event of a recall, and the safety checks that would have to be bypassed, and the change in process for administration because the medication would not be able to be put into our medication dispensing cabinet. We reached out to other local hospitals to see if they shared the same concerns as we did, and if they administered medications through white bagging. They did share the same concerns, and one even said they would absolutely not do white bagging and send their patients elsewhere. We wanted to serve our patient and give them access to care without the burden of the parent and child having to travel, or for the parent to have to figure out transportation for their child to receive the medical care needed. We also didn't want the child to miss any more school time than they would have to. So we decided to do what was best for our patient, even though it wasn't best for us, and we served our patient. While I spoke about the processes and concerns we had when we first encountered white bagging, those processes and concerns still remain current and valid in what we are encountering today. Critical access hospitals operate on a very thin margin, and continuing this process, if it would expand to high-use drugs and more patients, that'd have a huge effect on us.
Thank you. Thank you for your testimony. Questions for the testifier? If not, I think I'm kind of anxious to hear the opponents because you make a very compelling argument. So I'm really anxious to hear what the opponents have to say. So thank you for being here.
Thank you. Thank you for having me.
Other proponents? You're back.
Thank you very much.
Go ahead.
Senator Jacobson, thank you for letting me speak today.
We're going to need to give you a running start so we can get you to the finish line.
Thank you. Well, for the record, my name is Dr. Melvin Churchill, MELVIN-CHURCHILL. Again, I'm here on behalf of the Nebraska Medical Association, the Nebraska Rheumatology Society, and as an active practicing rheumatologist, I'm here also on the basis of my practice in arthritis there in Nebraska, which has been in existence for over 4 years. To take care of autoimmune disorders ranging from rheumatoid arthritis to lupus, gouty arthritis, and others, requiring systematic and consistent management with various agents known as biological products. that term is probably foreign to you, but basically they're antibody-like structures that interfere with the function that reduces inflammation, which in turn makes the patient better. Over the years, we relied on a lot of products that were ineffective borrowed drugs from other disciplines. And some of you may remember gold shots. Well, we don't do those anymore. The goal of our infusion center, which we've had in existence for quite a long time, provides continuity of care. Patients under direct supervision by clinical staff, which are well trained, and within a few feet of my door, literally down the hall, I could almost throw a paper wad that far. It allows us to monitor these individuals in a comfortable environment, consistent basis, and the white and bagging idea really is going to be extremely timely and cost ineffective, which increases our administration burdens and cost immensely, not to mention our liability. When we order these drugs directly, we have complete control over the chain of custody. We're able to provide the agents knowing full well they've been handled properly and stored properly. Temperature control is critical for all these agents. It's important that they come in from reliable sources. When the patient might receive this product and we don't know how it's been maintained or handled, it may have, as this other person said, been frozen or whatever. So it's really a matter of safety and making care of the patient appropriately and not taking any chances. I certainly wouldn't want, I have a lot of things delivered to my front door and I don't always know how well, and oftentimes they're broken, they're frozen, and thankfully they're not my medications. We do have approximately 500 infusions a month in our clinic, and we provide this service at a bargain cost. If you compare our cost to what it costs in other centers, particularly hospital centers, as a rule, we've seen from our patients the difference in cost, and we try to do it as cost effective as we possibly can. If the drugs are designated for a given person and they don't show up, or they're sick, or something needs to be changed, we'll have to waste the product. If the medical history changes, the patient walks in with infection, or just walks in and say, I'm still on some antibiotics for pneumonia. I just got out of the hospital last week and then they want their biological. We can't use it. So it's really difficult to maintain consistent care when you don't have your own supply and can make adjustments on the fly. It's really, really important. So I think it's all important that we control our access and control our supply so we can take the very best patient and care we possibly can.
I'm going to ask you to just wrap up if you're
done
here.
One of my APPs that works with me says this would be like going to a restaurant and bringing your own steak and asking them to fix it. I don't think that most Nebraskans would appreciate that. No, we really want to make sure this is safe and consistent, and having control of what we do allows us to do it well and effectively. It's quite a process, and these patients are, so willing to come and help take care of themselves. Compliance and safety is critically important.
Thank you.
Thank you very much.
Questions from the committee? Senator Dungan.
Thank you, Vice Chair Jacobson, and thank you again for your testimony. One thing, and I know you didn't really get a chance to get to it in here, but I'm just curious if you could briefly, because I know we have a lot of other testifiers, talk about is the liability concerns for hospitals here. Does the hospital take on the liability concern
Well,
if
you're administering a drug? If you provide the drug, you plug an IV in. Most of these are given intravenously or some subcutaneously. We don't provide oral products in our infusion center. So it's really up to you to make sure it's accurately and properly prepared and given by a professional who's been trained to do that. And that's what we provide. We make sure the drug is in fact what it's supposed to be. We bring it in and we have all sorts of refrigeration that we have monitored 24/7. We have to make sure that, and we have that monitor and that temperature gauge hooked up to an alarm system that's out of range. So we might get a call in the middle of the night to run in to make sure something's not wrong. And I sometimes have to do that.
And so part of the concern it sounds like you have is that if these drugs, the white bag drugs, are incorrectly provided, or there's an issue with them, that could potentially shift liability to the hospital that they wouldn't have to deal with if they were doing it maybe the entire process themselves.
Yeah, it's basically, if we have control over it as it comes through the door, we know where it came from. and we can store it properly. And we have it there so we can adjust dosage too. We have to make changes on a given moment in time. It is impossible to do that when something's sent and, oh, patient's not doing well, or they have a side effect or reaction, and we have to make some adjustments, then the product's wasted. When we have control of that, we have better control of how the patient receives the product safely and accurately. And that's the bottom line. We really want to make it safe for the patient.
Thank you.
Other questions from the committee? Thank you for your testimony.
Thank you very much.
Other proponents?
Vice Chair Jacobson and members of the committee. My name is Mandy Oglesby, Mandy Oglesby. I have been a registered nurse for almost 24 years and fortunate enough to have spent the last 20 years in rheumatology as an infusion nurse. I am here to testify in support of LB 448. It is extremely important that we continue to have access to the medications that we provide to our patients in our office. We need to continue to be able to adjust a dose of the patient's medication on the same day of an infusion. Many of our drugs are dosed based on the patient's current weight. If the dose would need to be increased to be in a therapeutic range, we would need to have our own supply of drug on hand to do so. If the patient would need to discontinue therapy and we only have drug available for that specific patient, we would have to waste the medication, creating unnecessary waste, in turn being very costly for everyone involved. Another important reason to have our own supply of drug available would be if the patient is not doing well at their current dose, we are able to increase their dose on the same day. If we would only have the patient's supply of drug, we would not have access to additional medication on hand to increase the dose, causing the patient to suffer and wait until their next infusion to receive the new dose. This could be anywhere from 4 weeks, 8 weeks, or sometimes as long as 6 months, depending on the medication dosing regimen. Having our own supply of drug also allows us to infuse new infusion patients on the same day. This saves the patient a trip back to the office and allows them to have relief from swollen and painful joints sooner than if they had to wait for their own supply of drug to arrive. Having our own supply of drug that we order ourselves allows us to have full control of purchasing from one supplier. This ensures that the drug is safe for the patient because we know it has been handled and stored properly at the correct temperatures from the time the drug is received from delivery to the time the patient is given the medication. By ordering drug in bulk, this also ensures that the patient's drug is here on time for their appointment, as many of our patients come from all over the Midwest to receive care in our office. If the patient's drug shipment was delayed due to weather or other unforeseen circumstances, the patient would have to be sent back home without receiving their medication, which would not be in the patient's best interest. In 2022, we administered a total of 5,823 infusions in our clinic. If we would have to order drugs specifically for each of those 5,823 infusions, most of those patients being infused monthly, it would be a logistical nightmare. We would have to keep track of approximately 500 patients to ensure that the drug is here on time monthly, calling each patient's individual pharmacies, tracking and logging each patient's drug. This would take valuable time away from monitoring and caring for our patients. Our office would not have the staff or the extra time it would take and would be very costly. In fact, it would be devastating to our office. I have experienced on a smaller scale of what this would be asking of us, having just a few patients that utilize patient assistance programs to receive free drug. And I've had to monitor and keep track of their individual drug for each monthly appointment. More times than not, I've had to make several additional phone calls per patient after already having completed and faxed forms to follow up as to why shipments have not yet been received for the patient's scheduled appointments. It's very time consuming on a small level, and I can't imagine if it were to be done on a larger scale.
Thank you. Questions for the testifier? Okay, if not, thank you for your testimony.
Thank you.
Further proponents? Now, let me just caution everyone too, we are running late, so we would encourage you to, when the yellow light comes on, start thinking about your close. When the red light comes on, we'd really like you to wrap up those comments so that we can keep going and stay on schedule. So, thank you.
Good afternoon, Chairperson Jacobson and members of the Banking, Commerce, and Insurance Committee. My name is Amanda Peckney, Amanda Pekny. I'm the pharmacist in charge at CHI Health St. Mary's, an 18-bed hospital that serves the community of Nebraska City, Nebraska. We are fortunate to offer a variety of outpatient specialty care services, including infusion and injection treatments to our patients. Thank you for the opportunity to express my support for LB 448 and efforts to increase patient access to timely and affordable medications by discontinuing the practice known as white bagging in Nebraska. I am one of many critical access hospital pharmacies that have been affected by payer-mandated white bagging policies. These policies are impacting our business practices and patients, including delays in care and expensive medications being wasted. The following 3 specific patient cases highlight these examples. Patient A was prescribed a medication to be infused weekly, but was required to utilize the white bagging process with their insurance. The designated specialty pharmacy refused to ship their medication until a prior authorization was approved. Our facility called the specialty pharmacy when we expected approval to arrange for shipment. But with a short work week due to a holiday, the specialty pharmacy was closed. The patient had to wait an additional week before they received their medication. Patient B was prescribed a medication that was to be administered every 4 to 8 weeks. The specialty pharmacy auto-shipped the medication every 4 weeks, regardless if the medication was administered. The patient had the medication discontinued, and as a result, several vials that were shipped had to be wasted, as they could not be returned to the specialty pharmacy that had sent them and could not be used for another patient. Patient C was prescribed a medication that costs approximately $50,000 per dose. In this case, the specialty pharmacy did not ship the product until the date it was due to be infused. Because of this, the hospital had to purchase a vial of this medication that we may not be reimbursed for to prevent a delay in the patient's care. In summary, LB 448 is important for hospitals like mine to deliver high-quality care to our patients. Thank you to Senator Bostar for introducing LB 448 and for the Banking, Commerce, and Insurance Committee for your consideration of this important patient care and safety issue. I welcome any questions the committee may have.
Thank you for your testimony. Questions from the committee? Senator Cal.
Thank you, Vice Chair Jacobson. Are hospital pharmacies higher priced than these outside pharmacies? Is that the reason why they're trying to use the outside pharmacies?
Maybe someone else can answer that question.
Okay.
But, I don't know.
Okay. Thank you.
Other questions from the committee? If not, thank you for your testimony. Other proponents?
Vice Chair Jacobson and members of the Banking, Commerce, and Insurance Committee, thank you for the opportunity to testify in favor of LB 448. My name is Andrew Radishel, ANDREWRADUECHEL. I am the Director of Pharmacy at Boys Town National Research Hospital and a member of the Legislative Committee of the Nebraska Pharmacists Association. Boys Town National Research Hospital is located at 14,000 Hospital Road on the campus of Boys Town, Nebraska. Our healthcare services include acute pediatric inpatient hospitalization, surgical services, inpatient psychiatric hospitalization, and residential medical treatment programs for children and adolescents with behavioral disorders. Our medical clinics include primary pediatric care with 5 Boys Town pediatric locations in the Omaha metro area and specialty care clinics for children and adults across Nebraska, Iowa, and South Dakota. We also provide telehealth services to 6 rural sites. During my tenure at Boys Town, I have watched the practice of white bagging continuously grow and witnessed it negatively affect pediatric patient care time and again. It has been hands down the single most disruptive payer-directed practice we have seen as a hospital pharmacy. One of the issues with white bagging is the shipping of the specialty medications. It is not done through a distributor and a courier, which are normal distribution channels for a hospital pharmacy or clinic. We recently had a large box of temperature-regulated specialty biologics delivered by USPS on a Friday night that sat on a dock all weekend because it was delivered to the wrong place, and no one was there to receive and unpack the medications. Tens of thousands of dollars of drugs had to be thrown out, and this happens often. As we have no control over the shipping, it's a logistical nightmare and to locate where boxes are being delivered and where they go. This also causes delay or missed therapies. Boys Town's clinics' medication refrigerators are full of biologics that are white bagged. We are taking precious square footage in our clinic space and paying for refrigerators and temperature monitoring for inventory that is not ours. Essentially, a for-profit insurer, PBM, and specialty pharmacy are transferring the cost of holding inventory, space, equipment monitoring, and personnel to Boys Town, which is a not-for-profit disproportionate share pediatric provider in our community. On numerous occasions, we had a patient show up for infusion appointments, but the biologic was never shipped. The first time this happened, we took the biologic out of our pharmacy stock so the patient wouldn't miss the important therapy. The insurer refused to reimburse us for the medication cost, and therefore we had to absorb $22,000 in an unnecessary medication costs. After this event, we had to change our policy and will no longer use our stock when the specialty medication does not show up. This has caused delays and missed therapy not only for this patient, but other patients on biologic therapies. Pharmacists are dedicated to getting the right medication to the right patient at the right time. We strongly support LB 448 on behalf of our children and families. It is a much-needed bill to protect the many extremely sick children from insurance practices that disrupt important life-saving therapies and cause serious barriers to care. Thanks for your time.
Thank you. Questions for the testifier? Maybe just a follow-up, I think, to what Senator Kalfa was asking earlier.
Is the reason? Go ahead. I'll let you answer.
That's.
Yeah. Okay. So
question,
your question was, is it? That's hard for me to guess, and that's certainly what they would say is that we charge more. But with the waste and the individual packaging and sending it, it's the care is really our focus. And we'd have to go dig into the billing, but I think that's typically what they're saying is that I would say that we are open to negotiating or talking about that. I mean, let's talk about it then, if that's the big barrier, because we're willing to lower that for good patient care.
Thank you.
Thanks.
Thank you for your testimony. Further proponents? Welcome.
Thank you, Vice Chair Jacobson and members of the Banking, Commerce, and Insurance Committee. I appreciate the opportunity to talk about this very important legislation, LB 448. My name is Jerome Wohleb, JEROMEWOHLEB. I speak today on behalf of Bryan Health and as an advocate for the Nebraska Hospital Association. I've been a practicing pharmacist for 43 years, serving Bryan Medical Center for the last 12. Bryan Medical Center is located here in Lincoln and provides services for Bryan Health System, which represents communities across Nebraska. Our vision is to elevate quality of life through better health. Insurance companies, white bagging practices compromises our ability to do so, and it tells providers what medications they can order and where the patients have to receive care. Our patients deserve better, a safer alternative that is being required by insurance companies and PBMs. Access to life-saving medications are in the balance of this discussion. One of the issues with white bagging, you've already heard, is the supply chain component. It's very important that supply chain isn't disrupted. I'll go through the details here, but I want to get to the patient examples that I've got following. So in particular, white bagging doesn't allow the normal supply chain security, quality, safety, all the elements you've heard testified by two of the presenters previously. And so what's the outcome of this? So if a patient comes to the hospital and is expecting to receive cancer treatment, and they find out that the insurance company sent the wrong dose or the wrong drug, or worse, a shipping error, as we just heard, who carries the burden of this decision? Well, frankly, our patients do. The practice may require them to drive to an entirely different town, receive their care and or their site of where the insurance companies drive them to. For their own personal provider could provide that in their hometown, or the medical center could provide that in their hometown. So the patient really is being compromised with this burden. Following me, there's going to be a provider providing information about patients and RSV, and that is important for our patients. We have 30 patients that provide white bagging in our facility right now. So our hospitals carry this burden of just managing the labor resources. You've heard some of those already. The storage, inventory management, product integrity, patient safety, all those are in the balance here. So what we're really looking for is to make a difference in our patient care and safety here in Nebraska. So I ask for your support of LB 448 on behalf of our most vulnerable Nebraskans. Please help us keep patient care and safety first for our patients, providers, and members of our healthcare team. I thank you, and I want to end with the point that our governor said in the State of the State address: our children come first. Let's keep that part of this legislation. Questions?
Thank you for your testimony. Did we get your name spelled out at the beginning?
I did spell it out, but I'll do it
Perfect. All
again.
right. I might have missed that part. Thank you. I figured our clerk would have kept me on focus here, so thank you. Questions for most from the committee? None? Thank you very much for your testimony. Further proponents?
Good afternoon, members of the Banking, Commerce, and Insurance Committee. My name is Stasha Schneider, STESHA-SCHNEIDER. I am a neonatal nurse practitioner, and I have been a registered nurse in the state of Nebraska for over 14 years. Today, I'm here to advocate for Nebraska's most vulnerable babies and the care they fight to receive due to white bagging practices. I ask that you please vote in support of LB 448. In my role, I help coordinate the Bryan Medical Center Synagis Clinic. Synagis is a medication with proven results to help prevent and/or lessen the symptoms of RSV, a respiratory virus. Bryan Medical Center is the only location in Lincoln to offer a Synagis clinic. In 2021, we administered Synagis to 62 infants. Families come from surrounding communities outside of Lincoln, driving at times hours to get here, and many have limited resources. Several families miss a day of work each month to obtain this life-saving medication for their child, risking their income and jobs to do so. Infants must get their Synagis injection every 28 to 30 days for it to be effective. The following is a real-life account. A mom goes into labor at 24 weeks, 16 weeks earlier than a full-term 40-week pregnancy. Her baby survived preterm delivery and spent 4 months in the neonatal intensive care unit before being discharged home. During their NICU stay, both babies required a tracheostomy and have been sent home on a ventilator, making them extremely fragile. Mom must work full-time to maintain her health insurance while balancing being a single parent with limited resources. Due to insurance requirements, mom will receive calls from the pre-authorization team, the insurance company, and the specialty pharmacy the insurance company contracts with to get her babies this life-saving medication, all before even making it to the clinic for treatment. On the day of the appointment, the mom takes time off work, loads her babies with their ventilators and their other medical equipment. When they arrive, the babies are undressed to be weighed as each Synagis dose is based off their weight. Given the medical equipment, you can imagine this is no easy task. The insurance company guesstimated what the babies weighed when preparing their dose at their specialty pharmacy. Their estimate was off, and they did not send enough medication. Mom has now wasted several hours out of her day, put her infants at risk to learn they will not be fully covered in their protection from RSV because the medication could simply not be supplied at the hospital she was attending clinic. Synagis Clinic requires countless hours from staff to run efficiently. Our staff make multiple phone calls for pre-authorization. The medication order gets sent to the specialty pharmacy for the medication to be filled, where the dose is sometimes filled incorrectly. Next, the specialty pharmacy calls the parents to get permission to ship the drug. If the parents are not reached, they are confused. If the parents are reached, they are confused as to why they are being called and asked to give permission to ship this drug. If they don't get a hold of the parent, the drug is delayed in being shipped. There are times the specialty pharmacy is unsure where to send the medication. Is it to the baby's home, the pediatrician office, or to the Synagis clinic? I've listed 3 routine instances where the result delays care and inappropriate dosing directly affects fragile infants. Nebraska never gives up on its kids. White bagging leaves multiple areas for error, disruption, and poor outcomes at the expense of our most vulnerable. As you hear from myself and others impacted today, I urge you to vote in support of LB 448. Our kids are counting on it. I welcome any questions. Thank you.
Thank you for your testimony. Any questions from the committee? Yes, Senator Dungan.
Thank you, Vice Chair Jacobson, and thank you for your example here is illuminating as to why this might be an issue. You were in the room, obviously, when we heard some of the other testimony on this. There was a circumstance we heard about from Boys Town National Research Hospital where a patient showed up and they didn't have the biologic, but they opted to go ahead and use their stock, which ultimately cost them $22,000. Obviously, that's a huge detriment to their finances. Are there other circumstances where that's not even an option to administer Synagis from your own stock? Because it sounds like you don't even have that ability here as well.
Yeah. We do have some infants that we do give Synagis to from our own hospital pharmacy stock. There's been some times where we've borrowed, if you will, with hopes that we'll still be reimbursed. I can't speak to that if they are. I don't see the behind the scenes of costs and gains, I guess. I'm not sure if anyone else could.
But ultimately, the concern there is that Brian or your clinic is going to be out that money if they're not reimbursed by the insurance company?
Yes.
Do you know off the top of your head, and it's okay if you don't, how much one dose or therapeutic treatment of Synagis costs?
Yeah, I actually had that in here and then I was trying to make the time. So the reason pre-authorization is such a big deal for Synagis is because each injection is $2,000. Some children, I mentioned it's based off their weight. So some children require 2 injections. And so that's $4,000. And each infant comes 5 months consecutively through the months of RSV season, which is November through March. So $4,000 times 5 months is $20,000 that goes to the family, if you will. So
Yeah, thank you. I think one of the larger issues here is that costs $20,000 or $22,000 in the other circumstance, but we can address that at another time.
Yeah.
But certainly, I appreciate you illuminating this with the example there. Thank you.
Other questions? I just have one. I would just want to comment. In fact, my wife and I had a 24-week baby 38 years ago.
Okay.
Unfortunately, he only lived for 5 weeks, but I cannot begin to thank you for the work that you do and people like you do. I appreciate it.
Thank you.
Thank you. Other proponents?
Hi, members of the Banking, Commerce, and Insurance Committee. Thank you for this opportunity to testify in favor of LB 448. My name is Elizabeth Bolshively, ELIZABETH BOALSSHIVELY. I'm a critical access pharmacist. I've been practicing for about 11 years. The last 6 have been at Henderson Healthcare. It's a 13-bed critical access hospital. We do inpatient ER and outpatient services. First and foremost, I want to iterate that LB 448 is about improving patient care. It's about providing high quality of care. It's about providing access to medications, but we're here for a reason, and it would be a disservice to say that this isn't about revenue for my facility and for facilities like mine. We have a lot of limited options in how we generate revenue to cover costs. And it's basically, if the current insurance practices continue, we're going to be forced into one of 2 decisions. We either going to not give those medications at all, and we're only going to give them if we're paid under the buy and bill model, or we're going to increase our administrative fees, and that just offsets the supposed cost savings that the PBMs will tell you that they're achieving. We have to pay for the extra administrative work, temperature-controlled storage spaces, and even FTEs if we can find them at all. I can really empathize with cost containment in healthcare. I spent a year as a resident with Blue Cross and Blue Shield of Nebraska post-pharmacy school graduation. I saw the dollar amounts going out the door, and I know of these cost containment strategies, and their appeal was really appealing. I understood them. I was like, yes, let's do it. But then I moved into the real world of practice, and they're theoretical and the reality, they still are miles apart. They're not actually saving money, it's just cost shifting to the hospitals. Thank you for your time today. I encourage the committee to advance LB 448 to the general file.
Thank you for your testimony. Questions for the testifier? If not, thank you. Other proponents? Go ahead, welcome.
Thank you. Good afternoon again, members of the Banking, Commerce, and Insurance Committee. My name is Marcia Muting, MARCIA.
Mueting. I'm a pharmacist, the Chief Executive Officer of the Nebraska Pharmacists Association, and a registered lobbyist. And I'm only going to do about half of my testimony. On behalf of the members of the Nebraska Pharmacists Association, I offer our support for LB 448 and thank Senator Bostar for introducing this legislation. I'm sure a lot of people will think this is not a big deal, but pharmacists are the drug experts, and we are really particular about how drugs are stored and shipped. And in 2013, Congress enacted the Drug Supply Chain Security Act to enhance the FDA's ability to help protect consumers from exposure to drugs that might be counterfeit, stolen, contaminated, or otherwise harmful. The DSCSA, as we call it, requires that pharmacies and hospitals purchase medications from certified distributors. They have to do their homework and make sure that they're certified, and that supply chain records have to be provided. Requiring a hospital or clinic to administer medications supplied outside of their normal supply chain could be considered a violation of this federal act. Thank you for the opportunity to comment. I'd be very happy to answer any of your questions.
Questions from the committee? Seeing none, thank you for your testimony. Other proponents? Any other proponents? Anyone wishing to speak in opposition? If there are other opponents, you could maybe make your way to the front row. I figured there might be a couple more.
Vice Chair Jacobson, the members of the committee, thank you for the opportunity to testify today on LB 448. I'm Bill Head, Billhead with PCMA, the National Pharmacy Benefit Manager Trade Association. I am in opposition to, our association is in opposition to 448 because we are concerned about the price impact. Senator Kalf asked the question about the price of hospital pharmacy drugs versus other pharmacy drugs, and that's really what it comes down to for us. And I think you have to sort of look at this in two pieces. One is the source of the medication. Where's the medication coming from? And then secondly, and this is where I think the hospitals actually have a legitimate point, is the storage, the handling, and the administration of that. Separate issue from the source, right? And I do take issue with the suggestion that the source of the drug, in this case, specialty pharmacies, that are, as I testified in previous testimony, the nationally accredited. So the handling, the storage, the shipment, the federal law that was referred to earlier, these are all things that are adhered to, right? So these tamper-proof packaging and so forth. Our members also, when they ship a medication, because there can be patients who are subject to weight changes, right? So they're prescribed a 10 milligram dosage. The PBM will often ship 50 milligrams to account for any change in weight or what have you. And the source of these medications are the same source that the hospitals are getting from. The hospitals aren't manufacturers, so they're getting them from the same sources that the specialty pharmacy is obtaining them from. They're not any less safe. So the notion that they are in some way, in some capacity, is just unfounded, and we take issue with that. At the end of the day, it is about the patient. So there are often, the health plan will often have procedures in place that if the shipment is late, it's delayed, it is for some odd reason, and rare, and we're unaware of instances, although I heard a couple today, I guess, the wrong medication. They will have workarounds, right? That they will reimburse the hospital for the drug, and apparently maybe not have it in all cases, but there are those workarounds in those rare instances, but they are in fact rare instances. And I'd also say that, I guess, to my knowledge, I'm assuming that the delivery driver who delivers their supply of medication is probably the same delivery driver who's UPS or FedEx driver who's delivering the specialty pharmacy medication as well. And in closing, I would point out that the bill also prohibits brown bagging, just to make things more confusing. Brown bagging is when the medication is delivered to the patient's home. And in that case, then they can either take it to the physician, but particularly during COVID, they were having the nurse practitioner or the medical professional come and administer the drug at their home. And there was an uptick of that during COVID. So I think eliminating that and eliminating white bagging as options is really doing a disservice to the health plan and to the patient at the end of the day. And with that, would be happy to answer any questions.
Questions for Mr. Head? I just have one, I think. I guess I'm trying to understand. So if I'm going to get my car repaired, that car repair shop has certain overhead costs, and part of their business model is that they're also going to buy the parts from their parts supplier, mark the parts up, and that's part of their model to get really paid for the services they provide. If I go to the parts, or if I go to the repair shop and say, I've got the parts in the back, I want you to put them on and I want you to warranty them afterwards, that would be problematic, would it not?
Well, let's think about who's paying for the parts. If somebody else is paying for the parts though, and they can get the exact same part from the exact same vendor and get, so the quality's not an issue, but the price is less.
But I think the quality could be an issue, and that's what we're concerned about.
Well, I take issue with this notion of the quality being any different.
I'm not talking about the source of the product. I'm talking about the product getting to your door. You raised the question that they're getting their own deliveries. I can tell you that my guess is that the hospitals themselves or whoever the provider is going to control when they receive those shipments, and they're there to take care of them. When they don't control the timing of that shipment, then you run into some of the problems we've heard. I mean, it's hard to ignore what the testifiers have said today. These are the people that are on the ground that are seeing it. And it's very frightening, to say the least, in terms of what's happening in this practice, all to save a buck. And I think that gets concerning. And so to me, in the bigger scheme of things, and what we heard in the previous bill and this one here, I am kind of concerned to just, kind of dismiss it as it happens very rarely. I think we heard a lot of testimony today that it's not a rare occurrence. And how do we fix that? And how do these hospitals in particular get paid when they've got to reach into their own stock or when there's a problem? And so I'm anxious to hear from the insurance testifiers as to how they handle it.
If I could, in response, Senator, in all deference, the URAC, National Accrediting Organization, did a study and found that mail order, and this is mail order broadly, so not just specialty, but mail order, the error rate was like 0.00009, something just infinitesimal, which is not to say when a patient is affected, that's not a big deal, because it is. But the notion that because the hospital isn't controlling the supply chain, right? They're not the driver, they're not the wholesaler. So they're putting their trust into a system. When the accredited specialty pharmacy is shipping something, it's tamper proof. And if it is tampered with, they will know that upon delivery. Which is not to say that what was been described isn't real, but I think you have to look. I think what this comes down to is because the health plan is going to go with the highest quality, lowest price at the end of the day, right? They'll kick us to the curb when it comes down to it. So, I appreciate what they said. I mean, obviously the hospitals were frontline, workers, not just in COVID, but all the time. So we're not unsympathetic, but at the end of the day, what are we really doing about the cost and the quality?
And I think therein lies the question. When you receive shipments that have set on the dock over the weekend and freeze, we got a quality issue.
Right.
So I think.
Well, yes, but there's workarounds for most of that, and when there's not, then maybe that's what we should be talking about.
I don't disagree. Yeah. Thank you.
Thank you.
Oh, yeah.
I had one brief question. I apologize. I keep being a little too subtle with my hand. I'm sorry.
Need to be more.
Thank you, Vice Chair Jacobson. Just to make sure I understand this too, these specialty pharmacies, these accredited specialty, who owns those?
Different. There's all kinds. There are affiliated specialty pharmacies with PBMs. There are some specialty pharmacies that are standalone specialty pharmacies.
Okay, and they become the specialty pharmacies through this process by a contract with the PBM or with the underlying.
Well, first they have to be accredited. For the PBM, the contract with them, they have to be nationally accredited, typically by 2 national accrediting organizations, because the handling and the shipment and everything else has to be precise.
Right. I'm just trying to figure out who becomes those specialty pharmacies and how that process works.
Right, and then in terms of networking and determining which specialty pharmacies are in the network, it's going to be a matter of who's providing the best service at the lowest cost. That we know that the pharmacy is safe and trusted and what have you. And under 767 now, the other pharmacies can become accredited, and as long as they accept the terms and conditions, be in network.
And I know you probably can't speak on behalf of all of your members when I spring things on you. So you've heard these stories, these real life circumstances of these times where, for example, a therapeutic's been administered and the hospital's not been reimbursed for that, like $22,000 or that $4,000 for the shots or things like that. Do you think that you would be open to legislation requiring that kind of reimbursement?
Well, I think, not when they can get it for a lower price. I think you'd almost look at it the opposite way. If the hospital is willing to accept what the plan would otherwise pay, that the plan is contracted to pay for that drug through other means and accept that reimbursement. But you don't want to put yourself at the mercy by taking away white bagging. You're basically saying the plan is at the mercy of whatever the hospital wants to charge.
But it just in these circumstances we've heard, I guess.
Well, rather than the reimbursement, let's have I think that it's more of a plan question, frankly, because the PBM can do a workaround in terms of the delivery, wrong dosage, kind of thing like that. The reimbursement really is going to come down to what the plan decides its choice is.
Okay, thank you.
Our workarounds are mostly around the drug itself. If it's the wrong dosage, it's late getting there. We're going to reimburse that. Most of our members are going to reimburse that hospital for the drug. The administration and the other things are going to be separate from that.
Got it. Okay. No, I appreciate that. Thank you.
Further questions from the committee, from Mr. Head? If not, thank you for your testimony. Other opponents?
Good to see you all again. We're still here. Thank you for having me back. Alex Summer again for the record, ALEXSOMMER, representing Prime Therapeutics. I do actually want to touch on something that Senator Dungan was just asking about first before I get into anything else. And that was around what the cost is and kind of like that, the $22,000. I think that $22,000 is misleading because we're talking about $22,000 like that's the fixed price of the drug anywhere and everywhere you get that drug. $22,000 is the submitted cost of the drug or submitted for reimbursement cost of the drug from the hospital. What the actual cost of that drug is significantly lower than what was actually submitted for reimbursement. Oftentimes, if it was going to be paid through like the specialty pharmacy, that drug would be many thousands of dollars less than what that $22,000 submitted cost is. So I think we're kind of talking about it's not a drug X cost Y. It's not a fixed in time and place kind of cost here. It is something that is based on what the hospital submits for reimbursement. So getting that out of the way, as far as what the drug costs itself, because that's a variable. Really, the question comes down to who is getting paid and how much. And when we see the who being the hospital, that how much, coming back to that $22,000, that how much is thousands of dollars more per claim. We're not talking about $5 or $10 on the margins. We're talking about thousands of dollars more per claim. And when you look at the entire book of insurance business, all of the claims are going through, that adds up to millions of dollars over the course of a plan year. End of the day, that is going back to what I said earlier about stretching healthcare dollars. It's really trying to make sure that patients have access to that care. And when you're spending that much more on each and every single claim, you are really limiting the ability to provide care to as many people as possible throughout that plan year. Next, I do want to note that the bill that we have in front of us we've heard a lot about patient safety. Mr. Head talked about the sourcing of the drugs and that being something separate. And again, that those specialty pharmacies are in fact safe sources of the drugs being provided. The bill here isn't about safety at all anyways. The bill here is about what hospitals are being paid for the drugs and what practices are allowed to ensure that they, again, are getting paid for those drugs to protect that revenue stream. If it was really about patient safety, we can have a discussion about what that is and what that bill looks like. But what we have in front of us is more of a hospital revenue bill than it is a hospital or a patient safety bill. So I want to make sure that we're focusing the discussion on the bill that's here and not a bill that doesn't exist right now. That bill we can discuss. This one is again about hospital revenue. To highlight one example, there's one drug in particular, MVASI. So we're talking not just about white bag, we're talking about alternative sites of care where patients can get the same treatment just at a higher cost. Where we can provide this drug, MVASI, at a home infusion clinic. That drug costs $414. When it's billed to the hospital outpatient system, it is $7,067. That's each and every time that drug is administered. That one drug, one claim costs that much. These are real dollars, real claims, and they add up, and they make it very difficult to provide comprehensive health care for all Nebraskans. For those reasons we oppose this bill, and I will be happy to answer any questions.
Questions from the committee? If not, I do have one. So I just want to understand. So if you're a provider and the shipment coming from the specialty provider gets there and the product is damaged, frozen or whatever, would you agree that the hospital needs to be reimbursed for that if that is in fact what happens?
If the hospital paid for that, yeah. I mean, whoever is paying for that drug would be reimbursed. I don't think we would double bill for that product.
And if it doesn't get there on time and the hospital needs to administer out their own stock, would you agree that they should be reimbursed for that?
I think we can have a conversation about where that comes from. I don't know. It depends on, again, who's being reimbursed and for what and where.
So they should tell their patient to just,
I'm not saying that at all.
come back, or what are you telling us?
So Jacob, that's not what I'm saying. What I'm saying is that they should, yes, we want to make sure. I'm going to back up for a second. I'm going to repeat myself from earlier where I said that we're not in the business of denying treatment and making people get sicker and have a disease state.
I'm glad to hear
regress.
that.
Because like I said, a sicker patient is more expensive. It's in no one's best interest, the patient especially, and the payer's interest, for them to be sicker, because a sicker patient is more expensive. So we are in the business of making sure that they get the treatment they need when they need it for the best possible price. So I want to make sure that we're very clear about that is not at all what we are in the business of doing. So as far as, turn that patient away, absolutely not. That's not what we would want to happen. I think as far as the mechanics of making sure they get that care and who's paying for that care, I think we can have a discussion about that. Absolutely. I'm happy to have that conversation where we can really address what that looks like. I can't sit here and say I know exactly, say definitively, yes, this person paid for it. It should look exactly like this, but I'm happy to have a conversation that, again, ensures that people are getting the care they need.
Well, I would just point out that obviously hospitals run a large part of their operations, or they lose serious money in. If you run an emergency room, an emergency department, you're going to give a lot of free care because you're going to have people that you take care of, you don't get paid. You're also going to keep people in your hospital who are able to be checked out, able to be released, but you're required to keep them there unless there's a safe place to deliver them to. Somebody's got to pay for that. Okay, and if the hospitals can't get paid somewhere along the way, they're going away. They're out of business. And as a rural resident in Nebraska, I'm concerned about the loss of rural health care. And so when we sit here and you give us that answer about it's all about cost savings, I think it's about saving lives. It's about saving providers as well. And that's why I think this is going to take more discussion. And I'm refusing to believe that it's all about cost, because at some point we've got to maintain those providers as well. Thank you. Other questions? If not, thank you for your testimony.
Thank
Further
you.
opponents.
Good evening, Vice Chairman Jacobson,
It
members
is
of the
evening.
committee.
It is
It most definitely is. My name is Jeremiah Blakey, spelled Jeremiah, B as in boy, Lake. I'm the Government Affairs Associate and Registered Lobbyist for Blue Cross and Blue Shield of Nebraska, testifying in opposition to LB 448. I'd like to use this opportunity to share with you a story about a situation we experienced last year and how it impacted one Nebraska family. I'm going to describe the situation in very general terms, as not to identify the family or the providers involved. What I will say is this took place in Greater Nebraska. It did not take place in the Omaha Metro or in Lincoln. So a few years ago, we had worked with a specialist who was managing the care for a child with specific healthcare needs to establish a site of care where the child could receive their regular drug therapy. The family had been traveling multiple hours each way for the child to receive treatment because there isn't a provider in the area of specialization within 100 miles of the family's home. So working with the child's doctor, we found a local physician who administered the prescription drug, which is an injectable medication, at the local clinic located in the family's community. This worked for a few years until last year, when we received a call from the mother stating that the local clinic could no longer administer the child's prescription drug. The child was scheduled to receive a treatment the following day, and the parent was asking if we would allow the local hospital to administer the prescription drug instead. Given the circumstances, we agreed, and the child got the treatment they needed. However, we wanted to understand why the clinic had canceled the child's appointment, so we contacted the physician to get more information about it. As it turns out, the physician was also an employee of the local hospital, and the hospital had determined it was a conflict of interest for this physician to offer infusion services at the clinic. And this will kind of help you understand why we think the hospital came to this conclusion. So when the child was receiving care at the local clinic, the cost of the drug and related services was about $5,300 per injection. When the same kid received the same treatment by the same doctor at the local hospital, the cost of treatment skyrocketed to more than $30,000, 6 times the cost. In addition to the stress this event caused the family, I would also note that the patient's cost sharing typically increases when the care is delivered at the hospital as opposed to a low-cost setting like the clinic. Unfortunately, our experience shows that hospitals are prone to inflating the price of the most expensive prescription drugs. Many of the new specialty drugs coming to market cost hundreds of thousands, even millions of dollars. One drug called Spinraza is estimated to cost $125,000 to $140,000 per dose and requires 3 doses a year. Watching my light. Based on our experience, some hospitals are charging almost 2.5 times the cost of the drug. Another drug, which I'm not going to try to pronounce, hospitals are charging more than 3 times the cost of the drugs, about $2 million a year for something that we would normally reimburse about $700,000 for. So that's
good.
Okay. So again, I just want to say that I appreciate the gentleman from Boys Town testified that they'd be willing to work with us on this issue. Again, that's what it comes down to is we can't justify to our members spending multiple times the cost of a drug when we have alternative sources. The hospitals are willing to work with us to bring down those costs to a reasonable level. We're certainly willing to work with them on that issue. So with that, I'll shut up.
Thank you. Questions from the committee? I guess I just ask one again. And I've said this many times in this committee, and I'm very, I recognize the challenges that the insurers have. I'm also very sensitive to the fact that we've got to keep providers out there. And unfortunately, the regulations that are out there on hospital providers today is there's a lot of people that are getting free care. And so ultimately, the hospitals can't continue to absorb all those costs. And that's why you're seeing that differentiation. And so I am concerned about where our providers are going to come from. I don't think the insurance company should bear all that burden. Obviously, we need Medicare, Medicaid reimbursements higher. We need to see this more as a societal issue. But I think to share some of the concerns on the cost differential, it's because they're spreading this cost over the entire operation, many parts of which are losing lots of money. All you got to look at the model today with hospitals. Many of them are losing money under this model. So what happens to our providers is my concern.
Yep.
Would you agree with that this is an issue?
Yeah, you and I have had this conversation particularly about Medicare and Medicaid reimbursement, and that's certainly an issue that you're probably more suited to address than I am personally, but it does affect our members and the rates that we have to charge.
Yes.
And again, I feel like a broken record in saying this, but we have members in rural areas that require care. We want to make sure they have access to care. And just as a general rule, we do reimburse our rural hospitals more than we do the urban hospitals for that reason, because their cost structure is different. And so, again, we're happy to work with our partners in the hospital community. But again, you're kind of squeezing a balloon here, and it's driving up costs for our members. We need to work more collaboratively with our providers instead of coming to the legislature and debating over where a drug comes from and how much the reimbursement rate is.
Thank you. And thanks for your testimony. Any last minute questions? Because we're going to get Mr. Bell next. Thank you.
Thank you.
Presuming I was an opponent, Senator Jacobson. So
Just a wild guess.
Vice Chairman Jacobson and members of the Banking, Commerce, and Insurance Committee, my name is Robert M. Bell. Last name is spelled B-E-L-L. I'm the Executive Director and Registered Lobbyist for the Nebraska Insurance Federation, the State Trade Association of Nebraska Insurance Companies, including most of the health plans in Nebraska. I am here today to testify in opposition to LB 448. I'm not going to reiterate everything that you have already heard. I'll share a quick anecdote though. In the evening, if you watch the news or sports, there's of course pharmaceutical commercials on. And one of the things that since I've taken this job, my wife works in insurance as well. So we don't get invited to career day at school. But I'll ask her, it's like, how much do you think that drug costs? And she's like, I don't know. And, it's the $5 coupon coming in, and then it's like Humira. Humira is all over the place right now. It's a wonder drug. It's $7,000 a dose. Something that's delivered to a patient's home, brown bagging. And I don't know exactly how many doses a consumer would receive in a year. I don't think it's 12. I think it's a lesser number than that. And say it's 4, right? It's $28,000. For me, that's a car. I think the average Nebraska family So we're a family of 5 in the Bell household. If we ran through the healthcare exchange, our premium would be close to $30,000 a year, just to provide us that risk coverage. I mean, it's very expensive. And so you see health plans doing a variety of things to get their hands around that cost. And you're right, we got to have the providers. If the providers aren't there, we're not able to provide those services. And so we need them to stay in business as well. And it's, you see the friction at the edges of this, where we can provide a drug that's tens of thousands of dollars for half the cost or a third of the cost or whatever. We want to be able to do that and don't want to be able to tie our hands, but we need to make sure that our patients are safe as well. And so it's always concerning again when you hear this. And by the way, Senator Dungan, we're on the risk if that patient gets sick, right? If that drug is incorrect, the hospital's not going to be liable. It's the insurance company. We're going to pay for that care for that patient. And we don't have a cap like a hospital does, which is a cap that, of course, we would support for our medical providers. But just know that insurance companies, as you know, don't have caps. So anyway, with that, I just want to say also thank you. I mean, this is the last time I'm going to testify, I think, this year. Before this committee, I got to go to judiciary on Friday, but you're always attentive, good questions. You got some of the best closers in the business sitting on this committee. So it's always fun to, so thank you. I go to other committees too. They're not this good. So.
For the record.
And I don't think my kids are watching, but they might be. Anyway.
For the record, you haven't been car shopping lately.
I know I got a 15-year-old and I got to do that this summer. And I don't buy new cars.
Go look at the junkyards if you're paying that price.
Okay.
Questions for Mr. Bell?
Can we have him say more nice things about it?
I would say, that's on the record, right?
I think
We're the best.
I think he's got nice things to say.
I know it's on the record, Senator. So.
All right, if not, thank you for your testimony.
You're welcome.
Any other opponents? I got to ask, are there anyone wishing to speak in the neutral capacity? Thank you. Senator Bostar, we have 15 proponent letters. And with
Excellent.
that, hey, welcome to the close.
Hey.
You've got all the time you want as long as you do it in the next few minutes.
That's right. I appreciate the discussion that was had in this hearing. Senator Jacobson, I think you're absolutely right that the transportation, the logistics side of this is a serious cause for concern. One of the chief challenges that we have to fix through this. And a lot of things were said, but I think what might be valuable in trying to put all of this into context, because the last 2 bills have some similarities, as do other pieces of legislation we've heard this year. And maybe this would be helpful. So imagine we wanted to start an insurance company. So we did. We created an insurance, all of us. And then in that endeavor, we wanted to make a lot of money. Because why not? So we start making a lot of money. And then we're hit with regulations. Regulations that limit how much money we can make, right? In the form of a medical loss ratio, which says something along the lines of, at least 80% of the money you make that you take in through your premiums collection must go back out in the form of essentially medical care, right? You can't make more than that, right? So that's really limiting. It's a big bummer if you want to make a lot of money. So you wonder what are you going to do? How do you get around that? So you think, well, we should create a PBM. Why don't we have our own? Because it doesn't work the same way for the PBM. So if we have our own PBM, we can make money off of spread pricing, for example, right? So if we own it, sure, the PBM is the one generating all the profits, but there are profits. So we can make more money that way. Okay, so we do that. And we're making more money and more money. And then we realize, If we had our own pharmacy too, we could make even more money. All right, so we create our own pharmacy. We do that to drive more revenues and profits to ourselves. But we got a little bit of a hiccup, right? Because at the end of the day, free will. The people we want to buy from our pharmacy can buy from other pharmacies, and that's also a bummer. So we create policies that force everyone to buy from our pharmacy. It's amazing because we control the plan, we control the PBM, and we control the pharmacy. So in the plan, we require the drugs to come from the pharmacy we want, which we own. That way, we can get around all of that. Medical loss ratio doesn't mean anything when it's only a fraction of your business. And everything else you get to use to actually create the profits that you want. White bagging may or may not have something to do with that hypothetical scenario I just said. I might leave it there. That was a fun exercise, I think, for us to go through. Be happy to answer any final questions.
Thank you for taking us down that journey. Questions for Senator Bostar? Okay, thank you.
Thank you.
And that concludes our hearing on LB 448. And what is the plan for LB 538? Perfect. All right. So we're going to move on to open the hearing on LB 538. Welcome. Welcome.
What?
Said we were supposed to grill you?
I don't remember that part. Well, good evening, Vice Chair Jacobson and members of the committee. My name is Tori Osborne, TORIOSBORNE, and I'm Senator Julie Slama's legislative aide. And I'm introducing LB 538 on behalf of Senator Julie Slama. And this will be quick. LB 538 is a shell bill. That's all I have. Thank you for your time.
Thank you very much. Any questions? If not, get out. We won't ask you questions. So thank you.
Perfect.
Are you going to stick for a close? You're going to waive. You're going to waive
I'll
close.
waive it, yeah.
Okay. So are there anyone wishing to speak as a proponent? Anyone wishing to speak in the opposition? Anyone willing to speak in a neutral capacity? There's no letters. There's no closing. So we're going to close the hearing on LB 538. We're going to open the hearing on LB 537. You're welcome to open.
Well, good evening again. My name is Tori Osborne, TORIOSBORNE, and I'm Senator Julie Slama's legislative aide, introducing LB 537 on behalf of Senator Julie Slama. Again, it's a shell bill. So that's all I have.
Thank you very much for that great opening. Are there any proponents? Seeing none. Are there any opponents? Seeing none. Does anyone wish to speak in a neutral capacity? Seeing none. There are no letters. We're not going to have you close. So thank you very much. We're going to close the hearing on LB 537. And if only Senator Bostar could have been as quick. But thank you very much.
Imagine the scenario.